Right. Good evening, good day, good night, everyone. Thank you for joining me on the Global Financial Market Trading edition. My name is Bola Balogun, and basically, for those of you who know me, um, uh, uh, this is not the first time that we are doing this session. For the new people that are just joining in, starting from old Daisy, Olugbenga, Debamiwa, Joseph Mensah. I think I've seen Joseph before. Teach Kid, God's Will, Inyanabo. I would like to say thank you for coming in, and you are welcome to this interactive session. Basically, my own expertise is I've got 12 years experience in looking at the financial market, right? So it's kind of a little bit easy for me to be able to help you in a way so that all the kind of mistake that you can possibly make trading the financial market, we can quickly start to cut short all those mistakes that you can possibly make. I want to know how best to manage my profits. I keep losing it back to the market. Great, no problems. So we that's another questions that we'll deal with. So for now,
Okay.
what I'm doing is I'm just taking questions from everyone so that we can treat those questions. This is the end of the week, okay? This is the end of the week, and obviously a lot of us have traded this week. A lot of us has made some money this week. A lot of us has possibly make some mistake again this week. Okay, so those mistake are one thing that will help us grow. Okay, and then obviously we learn from our mistake, and all right, no problems. We do that. Please, how do I craft a trading plan and stick to it? All right, no problems. Yeah, that's another question. It's a good question. So what I'm gonna do first of all is I'm gonna go through the list of all the questions as quick as possible. Yeah, some of them will involve us trying to actually going into a chart to see how it works. So the first question that I've got today is entry timing. Okay, and exiting timing. Okay, all right, so if we want to deal with that, I believe the best way to do, how do one use the trading view without subscribing? Okay, all right, that's another question. No problems, we look into that. I'm hoping. All right, no problems. So you can keep bringing the question in. I will try my best to copy them. Let me see who I've got. I've got Annette, Joseph Mensah, O Jackson, Nevan. Welcome, Nevan. Thank you for joining in. I've got Ayub Wadani. Thank you for joining in. Daisy, thanks for joining in. iPhone, Kamal Thomas, Olugbenga Debamiwa, PJ Teachkid. All right, so if there's one thing that I would like everybody to do is in the chat room, can you let me know where you are all from? Yeah, can you let me know where you are all from? Let me know the geo-specific location where everyone is from. If you can send me a message in that chat room, I'll be able to see where everybody is from. And for the people who can talk, it's not a problem. I can hear you as well. So let me know where you are all from. Okay? All right. So going deep into it, Jackson from Nigeria, of course. Jackson is from Nigeria. I know that. Who else have I got? I've got Bradford. Wow, I've got Germany. Wow, Ayub is from Germany. Scotland, Dundee. Bradford is Navan. Okay, interesting. So I've got a couple of people who are my locals in the UK here in Bradford. I've got someone in Scotland all the way in that cold suburb over there from Germany as well. All right, so let's get back to the business of the day. And I've got God's Will Nyanabo. Let me know where you are from, God's Will, if possible. Right. So the first question that we're gonna treat today is entry timing and exit. Okay. So what I'm gonna do is I'm literally gonna pop up a chart. All right. And on that chart, I will be able to ask some question, and I'll be able to show you the simple way of literally doing it. Yeah. And then you can have the complicated way of doing it as well. Okay. So if this is my chart, let's say UK trading view, let me use this. Alright, so this guy is slowing down. Oh, it's not actually slowing down. I'm the one slowing down. Alright, so I just want to pop up this particular chart. Scotland, can I put currency indicator on trading view? Well, you might have to look for a particular indicators on trading view and see whether you can use that. But for now, because I haven't done it before, I can show you where to look for to see how best you can put it on. Yeah, but I personally I don't use currency strength meter on trading view, but there might be some other applications that can do that for you. Okay, right, so going forward, this chart seems to say we want to be crashing, and I don't have the time of the day for that. And because I'm recording, sometimes it just consume a lot of resources as well. Alright, so just bear with my chart. It's gonna pop up for the sake of for the sake of someone who is just joining on new today. Yeah, I try my best to see how best I can help all newbies. If you are new to trading, is it always necessary to look at fundamentals before placing a trade or not always? Okay, that's another question. I'm just gonna put that in my notepad as well, so that as we are treating them, we know that they are out of the way. Right. Okay, so we got a couple of questions. The first one that we are going to deal with is the issue of timing. Okay, the issue of timing would be the first question. Timing for entry, timing for exit. I know we've covered it so many times, but it's always good to repeat ourselves so that we can get a bit of clarity. PJ's from Nigeria as well. Wow, quite a lot of Nigerians from here. All right. So, do you have any specific currency that you normally look at? Annette,
A AUD
AUD USD. Is there a reason why you choose that pair?
No, it's just because that's what's open on my laptop.
Okay, no problems. So if I go to UK Trading View and I load up UK Trading View, sorry for a little bit of delay. We're recording, so the software is kind of playing up. But not a problem. We will load up in a minute now and get going. I can hear some background noise. Background noise, sorry. If you have any question, don't hesitate to ask. All right, so this is AUD USD for the person that asked this question in terms of entry. Okay, no problems. And exit and timing. Timing is essential in everything. In business, timing is very essential because timing kind of give you if you are in a business at the right time, it kind of give you the best market share than someone who come into that business late. So timing, and how do you deal with timing? Okay, please, can I draw the harmonic scanner? Yeah, yeah, we will look into that as well. All right, so while this one is trying to pop up, full future charts for the AUD USD, and the good thing is you can apply this on any financial instrument. Okay, you can apply it on any financial instrument. Okay, no problems. I will. Someone is requesting for the upload of the video, so I will upload it. Don't worry. While that one is playing up, let me see whether I can get it on faster on Chrome. Sometimes Mozilla can be going on like a baby. I don't know why. Meanwhile, Chrome will just pop out faster. Whichever one pops in faster, I'll just use that. Okay. Wow. Sorry. So I've got the chart of AUD USD on here. All right. The first thing first is when it comes to doing trading as a business, whether you like it or not, you should be able to do it the right way. Yeah. And the right way is for you to see every single thing that's happening, what has happened before and what is happening currently. Okay, why is that important? Number one, the reason why that is important is it gets you familiarized with what your business is. Okay, so if you want to enter, all right, if you want to enter in the right place. This that I've got here is a monthly chart, okay? And on this monthly chart, like I always say to everyone, for you to be able to trade and trade successfully, you need to have a couple of questions to first of all put down and ask yourself. All right? When you have those questions, they kind of make life easier for you and let you understand what you need to do. So I've got 5 questions that I normally look at. Yeah. The first of those questions is what is the major trend? So before I enter any trade, yeah, I want to do my analysis and say what is the major trend? Okay. That's number one. So when I look at this chart, I'll be able to say to myself that I want to know what the major trend is. What do I mean by major trend? Major trend means which direction is this going? All right. So literally the data or the currency will start from the left hand side. So all the things that you can see from the left hand side has already happened. So it went up, went down, went up, went down, went up, down a little bit, went up, correct a little bit, went up, now correcting a bit again. All right, but for you to know where is the major trend, okay, you have to put the whole of this chart into perspective. Okay, and the trend for each and every time frame are definitely most of the time going to be different. Okay, the trend for each and every time frame are definitely most of the time going to be different, and that's the reason why you need the monthly chart. Can you see this is a monthly chart? Yeah, you need a monthly chart to be able to give you an overview of direction of where this is going, and the way that you do that is you can employ some tools. So when you look at this particular chart, you want to know which direction is going. One of the things that will let you visualize or understand which direction is going is for you to know where the highs and the lows are. Okay, so when you look at this chart, can everybody see this place on the monthly?
Mm-hmm.
Right, so
Yeah.
this is the low, this is the lowest that we've ever seen. Okay, can everybody see this place on the monthly as well? This is the highest that we've ever seen. Okay, all right. So is the price at the low currently?
No.
The price is not at the low currently. Is the price at the high currently?
No.
All right, so the price is not at the high currently. Is the price at the middle currently?
Yes, yes.
Yes.
All right, so the price is almost at the middle currently, which means at this low and at this high, that is the highermost point that we've ever seen on this particular currency. But currently, we are trading near the middle. All right, so if we are trading near the high, yeah, if we are trading near this high, this all-time high, what we will be thinking about is the particular currency is very strong. Okay, if we are trading near the low, what we'll be seeing is or thinking about is this particular currency is very weak. Okay, because these are the all-time highs that we've ever seen in this currency. These are the all-time lows that we've ever seen in this country. If we are trading near the middle, right, then we're gonna be saying, okay, it is neither weak nor strengthening. Okay, and the way for us to do that is we want to gauge precisely to have a precise mental figure of what is going on by putting what we call a Fibonacci tool. Okay, when you employ a Fibonacci tool and you employ it from the highs to the low, it kind of give you an overview of where you are on the trend. Okay, all right, so what you will then see is if I say this is one. Let me reverse this 1 second, please. I've got some background noise which I need to mute. Sorry about that. It's because there's a lot of background noise coming out. All right, so when you put a Fibonacci on this chart, yeah, what this will show you is where we are currently and where we've been. So what this means is the whole of this move, we refer to it as 100%. Okay, the whole of this move, we refer to it as most probably from 0 to 100%. So where are we on this move? Let me change this around quickly. 1 second. I'm just gonna reverse this. All right. So if I say to you, this is the beginning of the low part of the chart, isn't it? And this is the end, which is the highermost part of the chart. All right. So the whole of the big move that we've seen on this chart has now retraced or is correcting all the way back to where areas of about 38.2% retracement. All right, which means from 0 to I is 100%, but we've lost almost 70% of the value. Yeah, from the I. Am I making sense at all?
Come,
Hello,
come again.
Yeah.
am I
Yes,
making
hello.
sense at all? Annette,
Yeah.
Not a fan.
are you getting the sense of what the bigger picture is?
Yes.
All right, great.
Yeah.
So if you're getting a sense of what the bigger picture is, the whole of the move that we've seen in this particular currency from the year of let's assume 1993, that the data has started on this trading view. Yeah, if we check some other brokers, probably we're gonna have data from 1970. Let me see. Let me. Do I have FX Pro? Yeah, FX Pro. All right, let's see whether this is gonna open. So, but from 1994, all right, what we're seeing is the whole of the move. Out of 100% of the move, we've retraced almost 70% of the move. Yeah, about 62% of the move to 38.2%. Hold on a second, why that one just pop up. I want to show you more data as well. Probably we can see more data. I haven't used FX Pro in a long while, but yeah, let's just hold on for it. You see, the more data that you have, the more data points that you have in the market, the better. Okay, because what that tends to do is that tends to give you a much more clearer perspective of what your instrument is doing. And that tends to give you the definition of what the
Okay.
trend is as well. Bear me a
Uh,
second while
Why
this
you
one
don't
does its
want
thing.
to do
I'm not
before
sure if
like
it's
before entering the trade? And when do we do it?
sorry.
Okay.
Can you repeat that?
Oh, I was saying,
Can
when
you
do
repeat
the
your question,
analysis
please?
before entering the trade? So is it like during the weekend when the market is closed?
All right, good question. Good question. So, your analysis has to be done almost. Say you're gonna have to have a weekly analysis, yeah,
Mm-hmm.
because we live by the week. You're gonna have to have a monthly analysis because we live by the month. You're gonna have to have a quarterly analysis because we live by the quarter, and then you're gonna have to have yearly analysis. Yeah, don't let it sound too much. Yeah, don't let it confuse you. The reason being is this: you need to always have perspective of what the market is doing. Okay, and I'll tell you the reason why. You see, we have what we call cycle. And that cycle means just because you are just getting involved in the market today, that doesn't mean that some people hasn't placed orders way earlier before you get into the market. And that's why we have what we call future contracts. Hold on 1 second. So what is a future or futures contract? Future contract is an obligation for you to deliver certain amount of financial instruments. Please post the recording on the Telegram. No problems, I'll do that. Hey guys, please mute mics until you're ready to talk. All right. So what I'm gonna do is, I think some people are finding it disturbing the way some mics are making noise, but notwithstanding, let me check again whose mic is that. I'm gonna mute it in a minute. All right. So right. Okay. So going forward, once you can understand that you need to do a weekly analysis, the weekly analysis is going to serve you for the trade of the week, yeah, and that will put you in perspective of what your entries are going to be or where your entries are going to be. Okay, the weekly analysis will put you in perspective of where your entries are going to be, and once you have that perspective, it will make life a lot more easier for you. Okay, let me see whether I've got something like Euro USD here. 1 second, if it's gonna pop up or not. If it doesn't, I just want to show you backward just because I didn't log on onto this account. All right, so you're gonna have to have the weekly analysis for the trade that you want to take during the week. Okay, majority of the people, if you want to do the business and you want to do it right, then
Yeah.
this will become a part of your life, isn't it? This will become something that you are used to. This will become something that you check on the regular. This will become something that most probably you even check on the daily. But one thing that you realize is this: as you are progressing in your learning cycle, yeah, you tend to realize, and especially when you start to
Mm.
make money, yeah, when you start to make consistent money, all right, you will tend to realize that what you are looking for in the market is what I will refer to as quality trades, yeah. And what do I mean by quality trades? Quality trades are trades that can literally net you maybe say for example 400 pips, maybe 500 pips, maybe a
Yeah.
thousand pips, maybe 900 pips. Okay, all right. And imagine you've put your fib on this now, yeah, and you are looking at this chart. All you can see is you can see some data points here which I can refer to as structural area. Why are these areas structural area or
Yeah.
significant area? Look at the way the market went up, yeah, And when the market went up, this is the area where the price turned all the way down.
Yeah.
Okay, can you see this area here? All right, so that's the area where the market make a decision to turn all the way down. All right, so if you look at this area again, yeah, does it look similar to the same type of area like here,
Slightly.
this area?
Mhm.
Slightly. Okay, all right, so you see, like in life, I like the way that you said slightly. Yeah, in life and in trading, there is nothing that is perfect. Yeah, so when you are looking at a trading chart, or when you are looking to trade, you are not likely going to be looking for the exact. Are you with me? You are not going to be looking for the say like you are looking for one particular exact, but what you are looking for is a zone, an area where possibility of the same thing are likely going to happen. So if you look at this particular chart, do we have a zone over here? And the same zone is at the same thing occurring over here, at the same time occurring over here. Yeah, and this zone that occurs over here, this is in 1996. Okay, we didn't get to see that zone again until year 2004. Okay, we didn't get to see that zone again until year 2005 January. Okay, so we have some running around the zone around this particular time in 2007. Our market just flushed down that zone in 2008, and another flush in 2009 to the upside. Then that zone again, when you look at it, you are seeing it occurring again around 2015. Okay, and that zone again come into play in 2017, and again in 2017, and the whole of 2018 we haven't seen that zone. Yeah,
Okay.
the whole of 2019 we
Okay.
haven't seen that zone. What do you think will happen the next time price gets exactly to
So
this
according to the
zone?
previous chart, it will shoot up. I said probably it will go up.
Sorry, probably it will go up. Any
I'm thinking
other inputs,
it will respect the zone.
any other
It will
insights?
respect the zone.
Sorry,
Yes.
price will respect the zone. Okay,
Price
any
will go
other
down.
input?
Uh,
Price will go down. Any other input? Price will go up. Any other inputs?
I believe it's likely it will
you
respect or
you
go up.
see the reason why I like the way the class is so interactive is this. Yeah, now you yourself can be able to visualize the behaviors of traders. Okay, because each and every one that have something to say just now. Yeah, so this session is going to end in the next 10 minutes. Don't hesitate to go back to the Telegram group to be able to pick up the new link. It will probably be the old link as well. If anything changes, I'll put whatever link that I got in the Telegram group. All right, so going forward on this entry and timing and exit. Yeah, one thing I want you to understand now is this: each and every trader can have or form their own opinion about the market. Yeah, and that is number one mistake that everybody do. Yeah, you cannot form your own opinion about the markets. You cannot be adamant and say that price will go up or price will go down. Someone mentioned that price will respect the zone is more likely what I would call the right answer. But at the same time, price can literally go up above it. Yeah, price can get to it and bounce back down. Okay, price can get to it and do nothing and just linger around it. All right, so the price can do three things at any particular point in time. One of them is for price to go up, another is for price to go down, another is for price to do what? To do nothing. All right, so if you now understand your business and you understand your business to the point whereby you now know that at any particular point in time, price can literally go up from any zone. Price can literally come down from any zone. Price can literally do nothing from any zone. Your mindset or the kind of frame of mind that you're now gonna have is gonna be what? Is gonna be divided into three. Okay, so your mindset and the right frame of mind that you're gonna have is not gonna be stagnant or stable at one particular thing. Okay, are you with me? Are you getting my explanation? Are you getting my the kind of understanding that I want you to have towards the
Yes.
market? All right. All right, great. So if you are following me and you are understanding me, you need to have this particular tree mindset. Yeah, when you have this particular tree mindset, then you won't be emotionally attached. So that when price comes to this level, yeah, from here where price is, if price comes back to this level, you're not going to be thinking, well, price is coming all the way from the bottom to this level, so I expect price to do what? I expect I expect price to go down. No, you don't form an expectation in the market, yeah? Listen to this. You trade what you see, okay? Not what you think. Okay, you trade what you see, not what you think, but at the same time the market can give you a clue. Okay, and the kind of clue that I will give you, we start from this particular question: what is the major trend? All right, so I'm going to ask every one of you now, what is the major trend? What do you think is the major trend?
It's a downtrend.
Major trend is a downtrend. Okay,
Just
any other
now it looks
inputs?
like it's in a transition zone.
It's in a transition zone. Can you explain a little bit further what you
Consolidating.
mean by transition zone? Oh, all right, it's in a consolidating zone. Okay, right now. Okay. So when I'm talking about what is the major trend, what that means is I'm considering the
Okay.
whole of the data on this chart, yeah? And I'm putting it together as one. Remember, this is a monthly chart, okay? All right, and then we have the question is what is the major trend? For you to know what a major trend is, which is the major direction, you employ one simple tool. Okay, now you've employed the Fibonacci tool for you to see precisely where the price is based on the high and the low. Okay, but for you to know what the major trend is, then you want to look at the low that you've got. Yeah, you want to look at the high that you've got, and you want to see how price has connected this low to the high in the last period of months, years that this chart has opened. So you go ahead and pick a tool that is called trend line. Yeah, and this now that we're gonna do is gonna answer this second question. Okay, for you to know how to use your trend lines effectively. Okay, trend lines and what tool to use to get a trend line. So for you to get a trend line, you're gonna come to the left hand side of the panel right here, yeah, and at the bottom of the cursor tool or the arrow tool is what I refer to as the trend line tools. So in this trend line tools, you can have all sorts of different kind of trend lines. Okay, for the purpose of this training, we're going to use the first one, which is just the normal trend line. Okay, and what you want to do is this: when you are using your trend line, especially on this particular strategy, say for example, bear me a second, you want to get your trend line from here and look at the last low. Yeah, what I mean by the last low, including the week. Okay, including the week, which is going to be this one. Okay, and then you want to extend that on every next week that you find available. All right, so if you look at this, let me expand the chart a little bit. Can you see a low on this particular candle? Can you see this low here? Let me take off this. Can you see this low here?
Yeah.
Yeah, can you see that? That is the lowermost part on the chart. Can you see this low here too? All right. So what you want to do is you want to put your trend line, yeah, you want to employ a tool that is called magnets, okay? So when you employ magnets on TradeStation, when you drag the trend line, it's literally going to go and magnetize itself to the particular area that you are looking at, okay? But if you don't have magnets on the chart, say for example, I want to draw this trend line, I will have to be seeking for the right area, okay? But look at this. If I've got magnets on the chart, yeah, look at this. I don't have to bring the cursor all the way down to here like the earlier time before the price gets there. All right, you see that the price will just attract the cursor, and then for a next thing is you want to be looking at the next low. Now we are connecting the lows because we have to connect the highs as well, yeah, so that we can answer the question of what is the major trend on this particular currency pair. All right, so the next low will be this one, yeah, it needs to be respected as well. All right, so when you have the first 2 points, 1 2 connected together, okay, and that will be the end of the candle, the wick, you can decide to draw it up to a level like this for you to get another one connected. All right, but what you want to watch out for is your trend line now leaking, okay? So in this case, we have a low here, we have this particular trend line that is slightly broken, okay, and that's why the fact that it's slightly broken, the trend line went all the way up. So what we want to do is we want to adjust it so that it's not slightly broken anymore. All right, so you want to adjust it so that it's going to be from week to week, okay? And then once it's from week to week, you know that this particular trend line is very strong. All right, so the next thing you want to do is the moment you know that that particular trend line is very strong, you want to try your best to extend the trend line, okay, to the current day. So today's date is the 26th, going into the 27th shortly. All right, so have you seen those 2 touches on the trend line? It has to be precise like that, yeah, for this particular candlestick strategy. The first one, the second one, and at the low of that, yeah. All right, so once you've drawn that trend line and you can see only 2 touch, okay, let me do it again. And this is precise. You want to be precise. You want to make sure that you are precise with your drawing. The lows are the ones that you are targeting. So this is going to finish now. I'm going to just log into another one. Telegram. Control C. Right. Okay. Welcome back, Annette. I hope we are all gaining something. Welcome back, everyone. All right. So without further delay, I know some other people are still trying to join, but while they are trying to join, I'm just gonna be doing this and finalize this. So you've got your torches. You've got your torches. Your torches have to be on the two candles. Let me delete this and do it again. So you start from this particular candle, all right, and then you touch that one, okay, and then what you do is let me extend it. Left hand, right, okay, so that is more than accurate. Then you see this particular trend line that you have on monthly. If you want to do it and you want to do it right, if you are using your laptop, you can then change the color. Say for example, settings, you can change the color to this so that you can know that that's your monthly zone, okay? And once we touch this, one touch, two touch, look at over here, and this is the third touch. Yeah, the power of a trend line, yeah, is by touching it 3 times, okay? Once you touch a trend line 3 times, by the third time you will definitely almost hit a jackpot, because you'll be able to tell precisely what is going to happen. All right, so the first touch is over here. The second touch is what I refer to as market failure. Market failure is very important at the same time, because this is the particular price where price refuses to continue to turn down, where price change direction, where we actually see the reversal happening. So this is what I'll refer to as outer trend line, okay? Then again, just because my trend line cannot catch up with these gents over here, but this gents over here is part of the trend as well, okay? So what I can then do is I can have what is called an inner trend line, yeah, which is going to start from the second one. The first one cannot be able to touch all these other two areas. So you start from the second one to give yourself more room, okay? And starting from the second one, you go to the low of the second particular candle, and the low is right here. Agreed? And then what you want to do is bear me a second, just because I have magnet on, is playing up. What you want to do again is you want to bring this down to here, all right, and then straighten it all the way. So this inner trend line now is now touching 1, which is the second part of the trend line. It's touching 2, which is the so 1 is the first part of the brokerage account. The second part of the brokerage account, yeah, for this particular strategy is going to be on number 2, okay? And then you can see that it's from week to week. And then the third area now is you want to make sure that when price is going up, even when price drop back down there, you can be expecting reaction. All right, so that is your trend line, both the outer and the inner trend line done. But the main aim is for you to be able to connect one end of the chart to the other end of the chart. So if you literally see the trend line going up like this, okay, if you see the trend line going up like this, now I'm going to go back to the question that I normally ask. Number one, what is the major trend? Okay, so from the low going forward to the right, yeah, we've drawn our trend line, and the trend line is telling us one thing. Okay, from the left to the right, the
Going
trend
up.
line is telling us one thing. Okay, just before I go into it, what do you think the trend
High.
line, where
Going
is the
up.
trend line
Upward.
pointing?
Up.
The trend line is pointing up, right? Okay, and this is from the low. So if the trend line is pointing up, okay, currently what tends to happen is, if I ask you what is the major trend, do you
No.
think you have a different answer
No.
to me? So
Upward.
what do you think the major
Upward.
trend is?
Up.
Sorry,
Yeah.
the major trend is uptrend, right? All right, but a lot of people said downtrend a while ago.
And then the price face down.
Okay. All right. So, and the for this exercise, you have to have a bigger picture of the whole charts, yeah, with yourself, for you to evaluate which direction is the trend actually going. So in a long term, and this is how you're gonna say it, in a long term, which means on monthly charts, okay, the trend is up. Okay, and this is how you're gonna be building a picture. Now look at this. Monthly, which is the major trend, equals
So
up.
that's a buy. Will that be a buy, like a buy then?
Sorry? All right, good question. I like that question.
Okay.
We are literally building a picture, yeah? So out of the picture that we are building, we've got 5 questions. Out of the 5 questions, we've only answered one, okay? Although it takes a little bit of time, but the moment you get you get a grip of this exercise, the clearer the chart is going to be for you. So if the monthly trend is equal to up, which is a major trend, yeah, you were asking if that is a buy. Well, in a simple answer, that means the price is going up, and that means the kind of reaction that you need to have if the price is going up is for you to be buying. Okay, just the question that you ask. But you cannot just buy based on one thing alone. Okay, you cannot just buy based on one single thing. You have to have a multi-level of confirmation for you to buy. Okay, so one of the confirmation that you're gonna be using to buy is gonna lie on the second question. Okay, so now that we know the major trend, we said the major trend is up, right? The second question is this: what is the market condition? Okay, what that means is, what is the chart doing currently? We've seen that the monthly trend is up, okay, based on this arrow, but what is the market condition? Yeah, so this is another second question. The market condition that you are looking for after you've seen after you've understand the meaning of the major trend is up is basically simple. So the market condition can only give you at least just two answers. It can be consolidating or trending. So what this is doing for you is, this is now narrowing you in. Yeah, this is not just you seeing the old chart as a whole anymore, but it's narrowing you in that what is the market condition. Are we currently consolidating or are we trending? Okay, so that's another key question. So if you know if we are consolidating or trading, consolidating or trending, then you start to build a mental picture of what you really want to do. you see if the market is consolidating, okay, and I'll show you what consolidating is, or consolidation or equilibrium is. If the market is consolidating, or the market is in equilibrium, or the market is retracing 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 to a previous level, all right, all that means is easy. Like, you want to know if the market is consolidating, or you want to know if the market is trending. So if the market is consolidating, it's going to be in one single place. The highs and the lows, you will be able to see it in a fixed bracket location. The trending means the price is accepting new price level. Either the price continues to go higher, or the price continues to go down. All right, so I do not appreciate someone messing up with my charts. The next thing is, you don't want to do this trend line alone. You want to look for every point that you can connect on the chart. When you look at here, this is another structural point here, which is going to be a eye, and you connect the eye again, a eye to eye. All right, so when you look at this chart, connecting this eye to that eye, where does the trend line face? Does it face up or down? All right, so the trend line faces up. But what you can now realize is, you are looking at this price from a different point of view now. That, wow, looks like the price comes from this high and touches this low. But if I look at it, I can put a trend line here as well. And when the price touch this low, it looks like as if price keep going up, yeah, gets to a particular location over here and drops back down. But where it drops, it's more or less like it drops on a trend line as well, such that when price hits this particular trend line, then the price rushes back all the way up. But all this that we are talking about, this is from February 2009, yeah, till what? Till July 2011, okay, till around July 2011. So from 2009 to July 2011, it takes a whole 3 years for the price to run from the bottom of this trend line to the highermost point on this trend line. And when you look at it as well, it will be hard for you to say that, okay, I'm going to sit down in this trade for it to come and hit this level, okay? Most probably you don't have the expertise to do that. Most probably along the line, you're going to be thinking something is falling, and then that will be the whole of your possibly money gone, okay? But once you start to build an investor mindset, hold on a second, someone is saying something. Try now. Click on the link. Oh, okay. Let me do the link like this. Control. Sometimes. Let me know if it works. All right. Sorry about this. All right. So what you are saying, let me make this relevant now. What you are saying is, you want to build a picture at the back of your head on what you can see by employing or drawing a line. All right, so what I want to do again is this. So as to be making things easier and clearer, I'm going to delete that Fibonacci for now. So you looking at this, you can see that the only way the trend line is going is still pointing down. It's still going all the way up, and the top one too is going all the way up. All right, so you can see that we bounced from here, we went all the way up again to bounce, yeah, and then we come back to the trend line again to start doing nothing. Okay, so over here we were doing something by moving up. Okay, over here we were doing something by dropping back down, and when we drop down, we literally drop to a level on the trend line again, and from that particular trend line we get a projection up, and this trend line is literally connecting this trend line. Yeah, at the same time, that's where we have the two data points, and when price hit this trend line, the price falls all the way back down again. Okay, so which is showing us that at the top here we have what is called a resistance, or the sellers are more than happy to sell the high prices, and at the bottom we have what we call the support, and the buyers are more than happy to buy the low prices. All right, so until proven otherwise, listen to this now. Yeah, this is how your market timing and where you're going to enter and then where you're going to exit matters a lot. Until proven otherwise, each and every time when you come back to this trend line, all you just want to do is spend a little bit of money by buying at the bottom. Yeah, just you don't have to think too much, and we will go to all sorts of different kind of entry techniques and how to be able to capitalize buying at the bottom. So you buy at the bottom because you are anticipating that price is going to go up anyway, and that's the reason why you buy at the bottom, and then you sell at the high. Yeah, anticipating that price is going to go down. So each and every time when you are approaching this trend line, what you're thinking of is you want to be buying this trend line. Okay, and then the next part is once it gets to this area, then you want to start thinking of selling this particular instrument. So what this has built for you is it has built a trade location for you. All right, and the kind of trade location that it has built for you is what you can employ on any time frame. So if I bring a ruler tool from I, right, so what we got from here to here is we've got about 3,608 pips. Okay, worth of a move. Okay, and then from here to here again is we've got about 6,051 pips worth of a move. Okay, and then if we come to think of it again, it's from here to here. Bear me a second. Where is it? From this top now to this bottom, we've got about 4,303 pips. Okay, and these are huge, although it takes a long time for them to come into being, although it takes a long time for them to materialize and give you all those 5,000 6,000 pips. But the thing is, you have a crucial area. You need to have a reference point on a chart. If you do not have a reference point on a chart, if you cannot ask yourself, where is my reference point on this chart, you cannot trade. Okay, so we are talking about what is the market condition. All right, so the price behave differently in the two market condition. The consolidating, the price tend to stay in one particular location. Okay, and the trending, yeah, the trending, the price tend to go up or go down. The consolidation, the price tend to stay in one particular location. All right, so let's look at it like this. If you're looking at this, and you see price doing all this all the way going up, all right, if you're seeing that all the way going up without much of any coming back down or doing any much of unnecessary staying in one particular bracketed position or bracketed mode, or in one particular how do I put it, in a consolidating phase, in a rectangular sort of a market, whereby the price will hit the high. As soon as it hit the high, it comes back to the low. As soon as it gets to the low, it goes back to hit the high. Right, But what you can see is you can see a clearer direction through time. Yeah, so this is what is called a trending market. Okay, all right. And the kind of trend that we can see here is, does anybody know the kind of trend that we can see on that particular
Uptrend.
Uptrend. Uptrend.
section that I boxed up? Sorry. So we can see a uptrend. Yeah, good, which is the right answer. All right. And then we saw that uptrend even occurring in the what's it called, in the uptrend channel as well, because you can have a downtrend channel. All right. And remember, this is still monthly. Okay. And what you want to do again is, when you look at such an area like this, what can you see in this area? Is the market just giving us one single direction, or the market
The
is
market.
in a trending mode? What can you see in this particular
Consolidation.
region here? What kind of market condition is this? Consolidation. So you can identify what your consolidation is, and you can identify what your trend is. Does anyone have a problem with that? Does anybody have a problem with identifying what trend is and
No.
identifying what consolidation is? All right. So does it mean that it is clear
Yes, it's
what
clear.
a
Yes.
Yes.
consolidating market condition is, and it is clear what a trending market condition is? All right. So if that is clear, one thing I would now want you to understand is this. Yeah. One thing I want you to understand is, how do I trade a consolidating market? How do I trade? How do I trade a trending market? Okay. There are two different strategies and two different ways of applying this. And please, from now on, yeah, listen and understand this carefully. You cannot approach a consolidating market the way that you're going to approach a trending market. I'm going to give the strategy to you, yeah, and I hope that strategy will stick. And the moment you start to employ that strategy, you'll be seeing a lot of difference in your trading results. Okay, and it's a simple strategy as well. You won't even believe it. Look at it.
Consolidating area.
Is this a trending or a consolidating market? All right, so
Yes.
that area too is a consolidating market. And look at here too.
Consolidating.
Consolidating.
Yes.
Is that a trending or a consolidating market? All right, so once you are seeing consolidation like this, you remember I told you there's a way to trade it. Okay, we're gonna get to the way to trade it when we get to the daily charts. Remember, we are still working with the monthly charts here. All right, so what we deduce out of this monthly chart is, by applying our trend line, yeah, in the right form, we can see the structures on the chart that can give us a high probability, yeah, and a long term, yeah, and a low risk trade each and every time when price comes to this trend line. Okay, so when price comes to this trend line over here, we encounter buying, despite the fact that I might have taken couple of days or couple of months, yeah, let's say couple of days for price to revolve around this area. But anytime the price comes to this trend line, we see buying. Price comes to this trend line, we see buying. So when price is coming back to that particular trend line, a lot of people is expecting buying as well. Well, there is a little buying that take place. Yeah, this particular buying took place, but what tend to happen is after this particular buy that take place around this particular trend line, we tend to now start to have an unusual behavior. Okay, the usual behavior is, once price hits this particular trend line, price should fly and continue to go up. But in this case, once price hits this trend line, price starts to play around this particular trend line. Price is not literally doing what we see it's doing over the last couple of few months or over the last couple of few years. And this is going to be an indication to be showing us that, okay, now we have a trend line. The trend line is not likely behaving as per our expectation, which means we expect when price gets here, we expect price to just continue to shoot up after it bounces from this particular trend line. It's in this case that we find that price is not doing what you will usually do around this trend line, and this gives rise to another type of market condition as well. Okay, and what kind of market condition are we going to call this?
Consolidate.
Consolidating. All right, so now you can identify what your consolidation is, and you can identify where that consolidation is happening on the chart. But going forward, what do we really want to derive by having this monthly chart? So the monthly has showed us categorically that the trend is up. Yeah, that is the reason why you can see that we have this low, we have a higher low, we have a much more higher low compared to this low. Let me put an horizontal line there so that you can see. What is a trend? Can anybody give me the definition of a trend?
Of market.
Direction of market.
A trend is direction of what?
Of market.
Of the market. Okay. All right. So the definition of a trend is a series of highs. Yeah. Or a series of higher highs or lower highs followed by a series of lower low and possibly a series of. All right, so what is a trend? A trend is a series of higher high followed by a series of higher lows. Okay, or a trend is a series of higher lower highs followed by a series of lower lows. I'm going to write that down so that we don't get confused. Okay, I'm going to write that down so that we don't get confused. So we've talked about consolidating market. Now we are looking at a trending market. Yeah. So in a trending market, what are we looking for? We are looking for a series of higher highs followed by a series of lower lows. So let's do that exercise briefly based on this chart as well. Okay. So can you see a low here, right? Can you see another low here? Can you see when price goes up and make a new low here? Okay. And then when price goes up, make another new low. When price goes up, make another new low. Price goes up, make another new low. Price goes up, make another higher low. So, and that is what we call a trend. So we have a series of higher lows, from low here to a higher low to another higher low to another higher low to another higher low to another higher low, followed by a series of higher highs. So we have a high here, yeah, we have another higher high here, we have another higher high here, we've got another higher high here, we've got another higher high there. So each and every time that we are seeing that this price is going up, it's actually going up because we are not just going up, but we are pressing, or we are taking on a new price level. Okay, we are taking on a new price level. This particular currency is accepting a new higher price level, and meanwhile when you look at here, price is coming down. Yeah, so this is going to finish in the next 10 minutes. You can literally get the link to join in again via here on the Telegram group. Let me post it on quickly. Sorry. So this will likely gonna be the link, should in case anything happens and that link change. Yeah, what I'll normally do is I post it in the Telegram group. So you are better off I'm clicking on the Telegram group, which I'm gonna send to you now, to get a new link. Bear me a second. in case the link is going to change, so that you can continue to benefit from this. I want to move a little bit fast as well, because this is just one question, and one question, just because we want to treat it right, and it's a lot of concern for everybody. So I've sent you that particular link of the Telegram group, where you can find the next link, should in case this gets to an end. Going forward, right? So a trend is a series of higher highs followed by higher lows, or a series of lower lows. Yeah, low, low. This low is lower than this low. This low is lower than this low. This low is lower than this low, followed by a series of lower highs. So this high is lower than this high. This high is lower than this high. So the highs are just getting lower and lower as we are going down, and that is the definition of a trend. That's zigzag nature. This is actually a trend. 1 second. So when you're seeing it like that, and then it's coming down like that, and then it's going up like that, and then it can decide to come down like that. Wait me a second. And then we go up like that, and that continues, and that just kind of continues. So we have a low here, we have a high here, we have a low that is higher than this low here, and price attracted that particular low to shoot price back up. Yeah, and then we have another low that is higher than this particular low, and at this price is where we find bargain again for us to continue to push price up. And this can go on and can go on for as long as ever, and then it can change again to the downward scenario, and at the same time it can just stay in a place whereby it's just not doing anything. Like here it's just in the same particular consolidation, or in the same particular consolidated zone. All right, so and that is what happens in a trend. So the way to trade trend is different from the way to trade consolidated market condition. The third question is this. Okay, so now you know what the trend is, yeah, which is up. You know what the market condition is. What is the market condition? So the market condition will start for you by looking at the last, at least the last 4 months. Okay, the last 4 months. So if I delete this, okay, and we want to look at the current market condition, yeah, in a short space of time, which is in a quarter, which is the last 4 months, which is going to be 1, 2, 3, 4. What do you think is the market condition
Consolidating.
over the last 4 months? Let me expand this a little bit. So consolidating over the last 4 months, right? Okay, so if I said over the last let's see, if I say from March 2013, okay, to where we are currently, what is the market condition? So I'm talking about from here. Let me put a
downtrend.
drawing on it. Let's do this. One second. Right. So in this phase, from here to here, what kind of trend are we in? All right. So when I first of all ask the first question, I'm very sure that this is what everybody is saying. Okay. And when everyone is saying this, that means everyone did not put into perspective what has happened properly in the past. Okay, and that's the reason why I said you have to look at the chart from a bigger time frame. You have to see the chart as a whole. You have to see the chart in complete form. Okay, because if you make your decision just based on this alone and you do not know that underneath here there's a trend line, just because we have a particular number over here that hits that low over there, yeah, and give rise to this particular trend line. When price comes back to this trend line, price was suffering. Okay, because price did not want to just carry on pushing down or turn around and just carry on pushing up. So price is kind of finding some kind of comfort, is finding some kind of equilibrium. Price is being accepted in this area, and that's the reason why you see consolidation like that. In a situation whereby price is not being accepted in a particular area, you're going to see massive swift rejection of price from that particular area. So in this particular case that we are seeing, if you're looking at the market from just one single perspective, you can be seeing that the trend is down, but you do not put into consideration the whole of the market. So for you to give me the right answer on what is the trend, that means you have to know what the whole of the market is doing, okay, from a bigger time frame. So we build this thought on a monthly chart, yeah, and the third question is gonna be number 3. Does anybody know what the third question is?
Is
Right.
the
What is the
momentum
third question?
increasing or decreasing?
The third question is, all right. So what does that mean? What that means is this. Look at here. Look at the rate at which we fall all the way down. Yeah, we fall all the way down very fast with a huge pressure. Okay, that means the momentum of us going down is actually high and is increasing on this. Okay, but look at here. One thing I want to show you clearly is this. Look at this. From here, from January, sorry, from here, which is June 2011, right? It takes us from June, look at this. How many months or years? 2000 and sorry, let's say from May 2011 till October 2015. All right. So from May 2011 till November 2015, 2011, 12, 13, 14, 15. That's almost about 4 years. All right. 4 years of this move down. Now, if we gauge this clearly, if we come here, from here, so this is from October 2015 to another March 2019. So 2015 to 2019, this is another almost 4 years again. All right, so it takes the market for almost 4 years to drop down, and it's taking the market Welcome back. Right. Just hold it for me 1 minute, please. Yeah. Right. Thank you for joining back. Right. So let's quickly move on. I know it's taking a little bit of time, but it's okay if we can just get this and understand this once and for all. So that we don't keep making the same mistake. All right. So for who else hasn't joined, let's quickly see whether we can invite them in case they are lost. Okay. Continuation. Sorry, Control Z. Some people find it difficult. No. Control C. Control V. So I'm gonna change this S into J. Okay. All right. Right. Okay. So it's taken almost 4 years to drop and almost another 4 years to do nonsense of not dropping or going up. Okay. And as you can imagine, everyone over here is going to be frustrated. They're not going to be seeing a good return compared to the return they've seen over the last 4 years. Do you want to sit down in this? It's now up to you to understand what kind of trading strategy that you're going to employ. We're going to discuss that very soon. But as you can see, we have a low here, we have higher low here, we have further higher lows here, which shows us the lows are moving higher, right? Meanwhile, the highs, let's look at the highs. If the highs too are moving higher, then literally we have one high here, yeah. We have another high here, okay. We have another high here, all right. So what kind of trend are we in? Are we in a downtrend or in a uptrend? Hello, are we in a downtrend or we are in a uptrend? So the lows are red, and obviously they are moving higher. The highs are green, and obviously they are moving higher. So when you have a series of higher highs followed by a series of higher lows. That is what is called an uptrend. So higher highs, this high is compared to this high is higher than this. This high compared to this high is higher than this. So you can see that series of higher highs, yeah, followed by a series of higher lows. This is first low. This low is higher than this low, and this
Yes, sir.
low is higher than
Yes.
this low. Do you get the meaning? Do you get the definition of our uptrend now?
Yes, I'm here.
Yes, sir.
All right. So if you now understand the definition of uptrend, let me check. Is Annette in?
Yes, I'm here.
All right, great. All right, so this is your question and it goes a long way. Is momentum increasing or decreasing? Over here, the way the price fall, this is momentum increasing because the price keeps falling down seriously, okay? Over here, is momentum increasing or decreasing? Over here, there's no momentum, there's no huge fall like a waterfall like this at all. So the momentum over here is decreasing, okay? Price is not falling strongly compared to the way that it falls over here. Why is momentum increasing or decreasing important in the kind of question that we ask ourselves? So the moment you notice that the momentum is increasing like this, yeah, you have it at the back of your mind that the particular trend or the particular market condition that is giving you that kind of momentum is likely going to continue, okay? But the moment you see that the momentum has started to depreciate and it's not increasing and it starts decreasing, then you will now start having at the back of your mind that, wow, most probably this trend that I can see now is not going to be practical anymore. This trend is coming to an end. This trend, I cannot trade this market in a trending with a trend strategy. This trend, I will have to look into a different strategy of trading this market. All right. And that's one key thing that I need you to understand. And that's the reason why sometimes when we enter some trades, and we do good in that particular trade, before you know it, by the end of the week or so, we've given it all out back. Okay. All right. So, and I'm going to show you how that keeps happening and what you need to do for you to get that better. That will answer Jackson's question as well. So the fourth question is this. The fourth question is, are we near any support
Hello, guys. Sorry, but can
or
guys just
resistance?
mute your mic? Someone's not making
Okay.
noise at the
So
background. Yeah.
if, say for example,
Sorry, but guys just mute your mic. Someone's not making noise at the background.
all right, so I'm gonna mute all. If you need to ask question, yeah, you can unmute yourself. Thank you so much for joining in. Nevan, team2weeksnotice.com, Joseph, Joel, JDs, Jackson, Mboss, Edmond, Annette, and yeah, Galaxy Note 8. Thank you so much for staying tuned and staying with me on this call. I mean, we've covered a lot over a short period of time, almost 1.5 hours, but yeah, I want you to just have the basic understanding of how the charts work so that you can know how to approach the markets coming in the coming week. So if we are near any support or resistance, yeah, what that is telling you again is, okay, the trend is all the way coming down. All right, so we have two type of support and resistance. We have what we call the static support and resistance, yeah. And what is the static support and resistance? The static support and resistance is that particular horizontal line that you draw, okay, that you now say that the market is hitting the ceiling or the market is touching it. When the market goes above it and comes back to it, it returns to a support, and before the market breaks it, it is a resistance. So over here, this particular green line can be our, over here it's a resistance, right? Price couldn't go above it over here, so it's a resistance over here too. Let's start making where it is a resistance point. let me second. So in this zone 2, it's a resistance point over there. Same applies to somewhere around there. There are a couple of bounces that we can see in this zone, yeah, although it breaks through it, and then also around there too. Let me clone that. So market hits this place, resistance, resistance. When it breaks it and comes back to its support, over here it's a support, resistance, resistance. Okay, so if we are near any support or resistance, what do you think is gonna happen? Say for example, now if your market condition is a trend, yeah, and if it is trending up or if it's trending down, in this case, the moment your price is coming near a support, yeah, then that is the point whereby you don't have to hesitate. Take some profit off the table first of all. Then when the support breaks, then you re-enter and start following the price back. But as soon as we are getting closer to support, it doesn't make sense for you to anticipate that it's going to break. No, because you can never tell what the market is going to do. Yeah, you always have to have an opinion of, I'm going to encounter 3 scenarios. It's either the market will break this particular area, or the market is going to bounce off this particular area, or the market is going to get there and do nothing. So those 3 scenarios have to be strong in your will, at your heart, especially when you are in a profitable trading situation, so that it's not going to be a situation whereby you are anticipating a break, and then just because you get overconfidence now and you are anticipating a break, and then you have a very bad attitude of saying to yourself that you can literally say where this market is going to go. That is the reason why you give back majority of your profits, because you always think you know what the market is going to do. Okay, but if you have at the back of your mind that I don't know what this is going to do, I'm only going to trade what I see, and then what I know is, as soon as the market is approaching a support or a resistance, there's no need for me to hesitate. Let me take something off the table.
Yes, sir. Thank you.
Are you with me?
Yes, we're with you.
Right. So if you are with me, as soon as the market is approaching a support or a resistance, just know that okay, the market has given me the best that it can give me. Say for example, you are expecting $500 profit, or you are expecting $1,000 profit, just because you fix that in your brain, and the market gives you maybe about $750 profit. The market is looking at the support or looking at a resistance, and the market knows that it's nearing this particular area, then what tends to happen is the market decides to turn. But you have fixed your mind on, I have to get this I have to get this $1,000, and then you see 500, or you see 600, or you see 650, or you even see £1, or you see £2, or you see £3, whatever amount of money that you are trading with, wherever you see. But just because you have to take the market and treat it like an art, like you understand your locations, you understand your specific, you are not in control of what you get out of the market. The market is what is going to decide at this particular point in time. I'm not going to move and give you that £10. I only want to give you £3. I only want to give you £4 because I'm approaching an area whereby I need to make a decision. The market is going to make that decision whether you like it or you don't. So just before the market makes the decision, it's good if you are making your own decision, so you don't help the market to think. but you already know that you are approaching a critical area, yeah, and then that's the area whereby you're going to act. Okay, so all the time it's all about reacting to what you already know. You know that area of support and resistance, that's where price can literally bounce. So you want to act in that area. You just want to take your profit. That's why it's good for you to know where your support, where your resistance is. All right, and then for you to now be able to say that, okay, things has changed, yeah, this is going down and it's not going to go down anymore. The last question is, which brings us to the end of the question that you will ask, is there any trend changing pattern? So you have all these questions. 1 second, and I'll now bring everything together as one. Thanks for this answer. This is basically what I need to be profitable in my trading. No problems, Jackson. All right, so is there any trend changing pattern? What does this do for you? What does a trend changing pattern do for you? The quicker you can sense when a trend is going to change. Okay, the quicker you can sense when a trend is going to change, the quicker you can understand when a trend is going to change, the quicker you can now start to improve your trading results. Because as soon as you see that a trend is going to change, there's no need to hesitate. There's no need to hesitate. Whether you've only make £1 and the trend is showing you that I'm changing, just get out of that position, because that is a trend changing pattern. And how do we know trend changing pattern? How do we understand trend changing pattern? All right, we're going to go through that, and I'm going to give you a scenario for you to understand what is a trend changing pattern. You know, a trend changing pattern works with the trend, yeah, and it does not only works with the trend, it works with a consolidation market condition as well. Okay, and that's the reason why we ask, what kind of market condition are we in? If we are in a trending market condition, yeah, we know how we can spot a trend change. And I'll show you how you can spot a trend change if you don't know how to spot a trend change. Okay, a trend, before a trend can change, let me bring up this whiteboard. Let me a second. So this is a whiteboard, yeah. I'm gonna share a whiteboard, okay, and then I'm gonna show you this, and we're gonna start to look for it, and you're gonna be giving me answers as we are looking for it. Okay, so we want to start with what I call a trend changing pattern. Yeah, so this is a impulsive trend, yeah, or what we can refer to as, it's got so many names, and I'll give you all the names one by one and you'll be surprised. Okay, and this one right here is what we refer to as let's assume for this illustration the trend is going up. Okay, so the trend is going up. The same is true for the trend is going down as well. Okay, so if the trend is going up, come on, stop messing about now. All right, so 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. All right, so if the trend is going up like this, yeah, and this is a 5-wave pattern, for example, if the trend is going up, okay, you can see that when this move up, yeah, this move is more or less like the major or the impulsive trend, or this is what we call an initiative activities. All right, what is the meaning of an initiative activities? An initiative activities is a deliberate activity. Yeah, it's a deliberate and a powerful activity It's an impulsive move. It's a move whereby there's a conviction of this is what we are going to do. The buyers know that they are going to be buying. Okay, the orders is there. They know that what we're going to be doing, yeah, we're going to be buying, and this buying that we're going to be doing with these orders can literally translate into what is called a trend. Okay, but each and every time when the buyers buy, yeah, they have to stop buying at a particular point in time and adjust. Okay, why they are stop why they stop buying and they are adjusting, yeah, adjusting can comes from all sort of different kind of reasons. So the particular number of buyers that buy over here, they may be looking at this area and say to themselves that, wow, okay, we are approaching that level, and that level is an area of resistance that we know from ages back. Okay, so they will say to themselves that, as a professional trader, I don't want to anticipate what is going to happen. I don't want to have it at the back of my mind that, yeah, we're going to break this particular resistance. No. So they will start taking off their profits, okay, just before they hit that resistance, or not thinking about whether they're going to be breaking that resistance. So they will take off their profit. While they are taking off profits, yeah, taking off of profit is an opposite reaction to literally buying, isn't it? Because when you buy in the market, for you to take off your profit, what are you gonna do? You're gonna sell. Okay, so when you are selling, yeah, coupled with the sellers at the resistance, thinking to themselves that, wow, look at the opportunity. Now they are at the resistance. We know that they're not going to be able to go higher anymore. Let's quickly take an advantage and sell this market. You see, what the sellers are doing is what is called a responsive activities. What they are literally doing is they are responding to the action of the buyers. Okay, so the buyers are the one who created what is called a strong move. They are the one who created the initiative activities. Okay, but over here, when you see this move down, the responsive activities is the sellers responding to the action that the buyers has already caused. But the responsive activity, because they are only responding to an initiative activity, it is not strong. Okay, it is not going to be so powerful like the impulsive or the initiative activities or the actual main trend direction activities. Okay, so the responsive activities, which is called a correction, which is also referred to as a retracement, yeah, which I refer to it as a responsive activity, excuse me, occurs in a trend as well. Okay, so when we hit a resistance over here, or just before we hit a resistance over here, or when we hit a resistance over here, the sellers come in to push the price down. Okay, when they come in to push the price down, the buyers knows that that is going to happen, so they are ready to take off some of their position anyway. So they take off some of their position and book in profit. Okay, and the sellers keep pushing the price down, but because the sellers over here, they don't have the same conviction that the buyers have got, that literally we are literally going to be buying, we are hungry, we want this, we are getting this, we have what we need it for. We've got a lot of tourist people coming into Australian economy, and those people literally they need dollars. So what are they gonna do? They're gonna be buying their dollars. Meanwhile, they're gonna be selling they're gonna be buying their Australian dollars by coming in with their dollars. So coming in with their dollars, they are buying Australian dollar. Australian dollars start to have value, or there's a multi-billion current project that's going on that obviously buyers and sellers need to interoperate. So when you have a responsive activity, the price is going to push down, but it is not always going to be as strong as the initiative activity. Okay, and then what you will tend to see is when the price push down, the price will want to come back up, yeah, and then when it comes back up to this level, two things can happen. It does not necessarily have to break. Okay, And that's the reason why, if you have it at the back of your mind and you know that, okay, price does not necessarily have to break, you wouldn't worry yourself if price did not break. All right, you will not worry yourself if price did not break. If price comes back to this area, it can even comes back down. All right, but what tends to happen is this. Let me now show you clearly. What tends to happen at this particular area, let me see. I don't want to clear all drawing. I want to take off. Okay, let me erase. All right, is at the area of resistance. When price is going back there again, yeah, if price manage to break that particular area, yeah, it's a good thing for price. But what price will do again is come to retest it to show that, oh, I've overcome you. I know that you are there. All right, here is your kudos. You understand? So literally that will serve as an area of support. You see this area, yeah, this area at this high here, that is an area that you can be considering for a trend change. Okay, because if we're going up and then we saw price correcting back down, if we now continue to go up, we need to be able to go past this particular high area, yeah, for us to be able to say that, well, the trend of events has changed. I will re-explain it to you. I'll actually show you on a chart. All right, so let's go forward quickly with this trend change. Clear. I want to literally share my screen now, not a whiteboard. All right, so let's assume this is a monthly chart. Okay, with this particular monthly chart, you can note what a trend changing pattern is. All right, and I'll show you, and we will repeat a couple of exercises whereby you'll be able to show me as well. So we keep going up. Let's assume we went up like that. Let me change this to one fancy color. Okay, and then we come down like this. Okay, let's even assume, yeah, because this is lower than that. And then we went up like that. Okay, to this particular scenario. And then we come down like that. Okay, look at where we come down to. So we are noting this particular low. Okay, this low over here is what we are noticing. All right, and then we went all the way up. Okay, all right, so for us to go up to this level, we literally stop at what is called an area of support, which is right here. Right, so now the good thing now is we have price doing this, coming all the way down. Okay, remember we have a low here to a high. Okay, to a higher low to a high. Yeah, to this low compared to this low, which one is higher? Do we have a higher low here?
Yeah, that's a higher low.
Are we there?
Yeah, that's a higher low.
All right, so that's a higher low. So when price is coming back to this area, let me change the color of this one to something that is gonna be colorfully strong. let's make it yellow. Let's see. That blends in too much. All right. So when price is coming back down, we expect price to still give us what? A higher low. All right. But in this case, at the moment when we get below this particular previous low, and then we did not see a bounce, that is the time to be considering and be saying to ourselves that a trend is going to change based on this low. So if we have any price, for example, coming below here, instead of price to continue to go up, any price coming below this zone here, yeah, instead of price to continue to go up, since we have a price that comes below here, that is a trend changing pattern for us. All right, so let's assume this particular moves create a trend change, okay, and that is huge and significant. Let's look forward again. So we keep going up again. And then again, so we have a low, we have a high, we have another low, then we have a high, okay, then we have what we call another low, okay, and once we are having this other low, we are anticipating that price should just line up itself and continue to go higher.
No.
But in this case, do we see this
No, we did
higher
not.
high? Do we see ourselves going higher? Does the price go higher? So the price did not go higher, so the price tend to stop somewhere around here, okay. All right, so when the price stops somewhere around there, we don't know whether we're not going to go higher, all right, until the next thing that we see is price turning and coming back down here. All right. All right, so what tends to happen? We have a low over here, yeah, we have a high over there, we have another low over here, then we have a high over there, then we have another low over here, then we have a high, but this high does not literally measure up to that high, okay. And once this high does not literally measure up to this high, what this is telling us is we have a lower high compared to that. All right, and once you have a lower high compared to that, now you're going to be looking for your trend change pattern. All right, I want who is going to be able to show me
Yes,
where
I'm
my
here.
trend change pattern is on this chart. Starting from Annette. Is Annette there? Because she's the one who popped it. All right, so tonight I'm going to make you
No.
a host, okay. You will be able to, have you got a mouse?
On my phone.
What have you got? You've got your what are you using?
On
my phone. Oh, you're on your phone. So if you look on your phone, you will see a cursor on your phone. That particular cursor, you can move it around.
Is this yours? Your case? Uh-huh.
Sorry, this arrow, this little arrow.
No, it's not moving.
Yeah, move it around with your on your
No.
screen. Let me see.
Sir,
It's not moving. Jackson, can you try and move it
I'm
around?
trying. It's not
Or
moving.
where is Edmond?
I'm here. I'm here.
Let
I'm
me see
here.
if Edmond is there. All right, I'm gonna make. All right, let me make Edmond. Let me make Edmond a host. 1 second, please. Right. Annette, I'm gonna reclaim host from you. I'm gonna make Edmond a host. Right. Can you try and move the mouse around, Edmond? Can you draw something on my chart? Let me bring 1 second. Let me bring annotation up. Are you able to draw anything on the chart? So who wants to try? I can't hear from Edmond again. Does anybody want to
Let me
try and
try.
show me where the trend change pattern is going to be?
I can try.
All right, go ahead and try. Who is that? I need to make you a host. One
Let me
second.
try.
So who wanted to try?
Yeah,
Let me see.
yeah, yeah.
Who wants to try?
Let me try.
Is that Joseph? Yeah.
Yeah.
All right. So I'm gonna make you a host. All right. So try and move the mouse or the that pen right there. You can literally write on my chart. Let me see if I give you that right as well. Wait. Probably where is where is Joseph again? Right. Joseph is here. 1 second. Right. So if I make a host, right, try and see if you can move my mouse. I know Edmond can do it because we've done it
It's
together
not moving.
before.
I'm using a phone.
But I don't suddenly know where Edmond
Yeah,
go.
yeah.
Is he moving?
I'm on the laptop now.
Oh, you're using a phone as well. Is there
I'm on
anybody
a
on?
computer
Is
now.
there anybody on a laptop or on a
I'm
computer?
using one.
Who is on a computer?
I'm using one.
I'm on the computer now.
I am
Jackson is.
Right. Are you on a computer now? Who is on the computer?
I am.
Jackson is.
Jackson is on a computer. All right. Let me make Jackson a host first of all. All right. So try and move my
I'm trying. It's not moving.
cursor.
I'm trying. It's not moving.
1 second. Wait. I know why it's not moving. All right. Try and move it now.
The pen is still not moving. The pen is still not moving.
Wait. Allow participant to annotate. All right. Try now. Let's see. Because
No,
you should be
that's not
able to do
working.
it.
Right.
Okay. All right. Wait 1 second. Let me see if Edmond is there again. Edmond. Right. Do you want to try and move my mouse? Do you want to try and I'm going to make you a host, and then obviously I want you to see if you can draw on my screen. All right, go ahead and do that. Let's see. Okay, so what are you using to draw? Sorry?
Stylus. I use a pen. A pen. A pen.
You use the what? You're using the pen to draw. All right. So what I want you to do before the
A
time
pen
goes
change
is show
pattern.
me where the trend change pattern is going to be.
Okay. Then change pattern.
Yeah, on this chart. What particular area is going to determine that the trend has changed? That would show you that you are
Upward.
wrong and you need to get out of this trade. I need a specific
Alright, brother.
horizontal
I believe
line
the
at a particular
0.9867
place.
horizontal line you
This
drew.
is gonna end within the next 1 minute. As
Yes,
soon as it ends,
exactly
I
that
believe
point.
the 0.9867 horizontal line you drew.
area exact. All right. So
Exactly that point.
right there, but not exactly right there. Oh, 1 second. Right. As we are joining in one by one. Let's see. Um, let's invite others.
Sweden, I need Sweden tobacco by God. I told already has Sweden, I need Sweden tobacco by God. I told already has
Okay. Right. So if you're in, you're welcome. Let me see. Someone is asking a question. Yeah, it's being recorded. Right. So as you're joining in, someone picked this area, okay? And they said this is where the trend change pattern is. But the exact trend change pattern is literally gonna be here. Oh, okay. So I need to delete this and then pick what is called a trend line. It's gonna be this low here. Okay. So number one, the first indication that the trend is likely going to change is on this particular area here, yeah, where you have a move that fails to reach the eye, yeah. So the moment, let me make this clear to you because we're gonna go to smaller time frame now and do some exercise. All right, this is still the bigger time frame, but we go to smaller time frame. After we put the strategy together one by one, we go to smaller time frame and do some exercise. All right, so we saw a move that's going all the way up here. Then we saw a move that came down to this level. Yeah. Once this move comes down to this level, you know that when a move comes back down to 36 EMA, it's going to find a particular support to bounce up. Yeah. So you are expecting that if price bounces up from here, price should be able to make a new high. All right. So the first attempt of the bounce up is on this green candle. Okay. Then the second attempt is on this red candle. The third attempt, another red candle. The fourth attempt is this green candle. Yeah. And every attempt that we've seen over the last 1, 2, 3, 4 months, we've not been able to come above this high. Then the fifth attempt is on this small red candle again. All right. So this small red candle, what it's doing, it's literally showing us that, oh wow, that it wants to move up on this candle, but this particular month comes in and then we not even still making a new high. Then we saw a red candle. Yeah, all we are aiming to do is to move all the way from here. Let me show you what we are aiming to do, or what everybody is thinking about. Is now that we attain this high, we want a situation whereby we retrace, okay, which there's nothing wrong in, to 36 EMA, and then we bounce back from that 36 EMA, yeah, to this area, and then go up like that to make a new high for the trend to continue. Okay, that is our anticipation. That's what we want to happen. All right, but that is what we are thinking about, that the trend is continuing, but the business is different when it comes to the chart. The chart shows us categorically that, well, anyway, you can think about that for as long as you want. I personally am not interested in going up. Okay, I want to come down. All right, so the others in the market are literally pushing the price down while you are anticipating break. So when you see this first sign, yeah, and how would you know that it's a first sign anyway? That's another thing that you will train yourself to know. The moment you see a move, sorry, bear me a second. Yeah, I know. Right, so the moment you see a retracement move, meanwhile, don't forget that this area is an area of resistance anyway, and it's a monthly resistance, okay, that we pick from here to there. So the moment that you saw a retracement back to 36, yeah, the next thing you are anticipating is for price to reject that 36 in a trending or in a uptrending or in a downtrending market, for price to reject the 36 and give us continuation. But on this particular candle here, we couldn't find that continuation. Okay, so once we didn't get a continuation, what we are thinking about is, well, it doesn't look like as if we are going up when this candle comes. All right, so when this candle comes all the way down, now we are thinking, wow, look at this, maybe it will need some time to go up. Okay, maybe. So we've now turned to a maybe situation, instead of us to be reading the chart and be saying, okay, we are not in control of anything, we are looking at what the chart is giving us and we are only going to be trading what we see. And while we are trading what we see, we are marking up some critical structural points on the charts. All right, so when I say to you that this is a trend change location on this particular candle, so I put an horizontal line there. Look at it. When the price breaks that area, what did he do? He went to go and retest it. It comes back down, went to go and retest it again to the letter. Okay, so when the price, when the market wants to confirm a particular place for you, yeah, you're gonna see couple of multiple retests in that particular zone. So those retests is what is gonna be showing you precisely that, okay, I realized and I know that this point is there. I know that this is my trend change pattern location, and then the next trade that I need to enter is even after all this has happened and you are looking for the retracement back to it. Yeah, the first time you got the retracement, price moves down a little bit, not as much. The second time you got a retracement, already from the moment that price breaks this area, you know that the trend to the upside that you are looking at has changed. Okay, and once the trend has changed, using these simple techniques, what you want to be looking at is a change in directional bias of the kind of trade that you want to enter. So now you're not going to be thinking bullish anymore. You're not going to be looking at a particular direction on the chart that is not going to be bullish, but you're going to be looking at an area whereby you can now start to sell. Okay, and straightforward, because you know where the trend change location is, you can literally do that with a minimal loss, so that when you now get a retest of that particular trend change location, you can take an advantage of the following move that will happen after.
Yeah.
Are you there with me? Is it making sense? right? So if it is making sense, what I'll now do is I'll now bring you into, you have the 5 questions already, yeah. I'll now look at couple of questions to answer this question: entry, timing, and exiting. Okay, so in some of the things that I've literally discussed right now, yeah, you know where to exit. Okay, so what I want to do is this: I want to show you.
Euro JPY.
I'm gonna pick another currency. Can somebody give me a currency?
Edmond.
Euro JPY.
Edmond.
Who mentioned Euro JPY? Who? Edmond. All right, so Edmond says Euro JPY. All right, so looking at Euro JPY. So if we start with the monthly, okay, this is what you want to do with this chart. As soon as you delve into this chart, you want to know what is your major trend, and you can quickly do that very fast. You squeeze up the chart together, yeah, you look at it, you'll say to yourself that, wow, this is the high, this is the low. This chart is very funny, the price is in the middle. All right, let me quickly put in my fib for me to have a perspective of where we are. Probably we are at the middle at the same time as well. Alright, so 50% is the middle. Now again, you can see that the Euro JPY2 has touched the 38%, which means from this low to this high, we've literally dropped almost about another 70 something percent of the high. That's how well we've come down. Okay, so if we've come down 70 something percent of the high, that might look, very negative, very bearish. Now is what we want to do is see how best we can know what the trend is. We will go back to that Aussie dollar because there's something I want to show you as well. So we look at the low, we put our trend line at the low. Okay, that trend line is literally, let me delete the, all right, so we've put our trend line on the low. Okay, and then we look at the highs as well, and then we put our trend line on the high. Okay, so in this scenario, things are looking slightly up, but you never know. Then you want to have a trend line here as well that is linking this eye, that eye together. So what you are seeing on this chart, yeah, just like the Aussie dollar as well, is the trend is giving us, this is a low, this is a higher low, right? This is a high, this is a slightly higher high. Although it looks kind of mixed more than anything, yeah, but it's slightly trending up. Not as strong as the Aussie dollar. The euro is trying to stabilize over a long period of time and is slightly trending up. All right, so how does that compare? What we now want to do is we know our questions that what is the major trend. The major trend is neither fully up or fully down, yet it's staying in the middle. All right, so apart from the major trend, what is the market condition? The market condition now, we want to look at the last couple of few months and say to ourselves that the market condition on this last couple of few months is what? What is the market condition?
Trending.
Can anybody give me the answer to what the market condition is?
Trending.
Somebody says trending. Any other answer?
It's
Last few months, Z price consolidating.
trending.
I think
Sorry?
I see consolidation.
It's consolidation.
Yeah.
What is the market condition?
Joseph.
You can see consolidation.
Yeah.
So who saw consolidation?
Consolidation.
Joseph saw consolidation. All right. Annette, what can you
Yeah.
say?
Consolidation.
Annette to see consolidation. Jackson saw trending. All right. So if you see consolidation, yeah, you're gonna have to tell me what are you looking at? Over how many
Yes.
periods back are
Last
you
3
looking at
months.
that makes you see consolidation?
Mhm.
This is a month, 3 months. So over the last 3 months, you can see
Yeah.
consolidation, right? Jackson, you
Um,
saw trending.
all through
How long?
the
What is your time
from
frame?
that period of 2008 down to the 2019, it's going down to
All right. So what I'm gonna do now is I want to make
Thank
you
you.
welcome Chioma, welcome Win Nichi, Nevan Isiye, Antonio White, welcome Demond, welcome, and Joseph
okay.
Antoine, welcome. So Jackson, I'm gonna make you a host. All
A
right.
tablet.
You have to. Have you got a laptop? Have
Yes,
you got
sir.
a computer?
Yes, sir.
Or what have you got? You are using a tablet.
Yes, sir.
Edmond, will he be able to annotate using a tablet? He should
Okay,
be able
for
to do
me,
it. Can
when I
you
touch my
can you
screen,
explain how you do it the other
a
time?
pen sign pops up. So when the pen sign pops up, I just click
Okay.
on the pen, then my tools come
Okay.
around, and then I can just draw it.
I didn't get
As well
that.
as
Okay.
yes,
All
you
right.
find a pen sign.
So you can literally do
Right,
that
so you
now,
just click on
Jackson.
it.
Okay. I can do that.
So after click, yes.
Okay. All right. So do you want to show me where you are talking about? Why is this market the time frame that you are looking
So
at?
if you
How long
if
ago are you looking at
if you
to say
consider
that the market is
here
is trending?
about this place. So from there we have series of highs, lower highs, and then downward for the highs, lower highs downward, and then the lows there are lower lows and lower lows down. So it's trending downward from that place.
Okay.
Not for me.
No, I think
Does
he's right.
anybody disagree with that? All right. So if you think it's right from
Yeah.
most probably it's talking about from the 1st of December 2017 to the current day, Jackson can see that the price is trending down. Okay, and some people with me here believe that you are right. Okay, is that my own belief too?
Yeah.
From that particular area that you've chosen, yeah. So we have a eye here, right? Whether we like it or not, we have a eye here. Price moves down a little bit. Let's look deeply into it, and that's the reason why it's essential for you to be able to specify how long ago you are looking, and that's the reason why I want to make people a presenter, so that it's not just going to be like as if I'm doing it and people are not getting it. I want everybody to participate. All right, so going forward, we have a move that touch almost the trend line here, then we come down, we try to go up, we couldn't take this high, then we come down. Okay, Then over this little period of time, what happened? A brief consolidation, and then price comes down again, and now we retrace back up. Probably we're gonna go up or not, but what we can see is we are trending down. So the force of the move is to the downside over the last couple of few months since February 2018 or thereabout. All right, so that is even the list of our concern now. All right, the major thing is we are slightly trending up, okay, but because of having a particular barrier, which is the which is this dynamic trend line. The other time we were discussing about trend line, we were talking about static trend line, which are just the horizontal trend lines, which can be your support and resistance. And then we have a dynamic trend line. The dynamic trend line is can be in form of this particular trend line that is moving from one eye up all the way down. You can see this is not on a straight line like the horizontal trend line. This is literally ascending, or it can be descending. Like in this case, it's descending, and it's also a resistant point as well. So sometimes your resistance does not have to just be only on the horizontal bit. Yeah, your resistance can fall in a dynamic manner, so that each and every time when we touch the resistance zone here and we come down and we come back to it again, we can always still understand why those area is respected. So we've touched here again, you can understand the reason why this is rejected. So now we are coming down, okay, and going down at any particular point in time. It's not a thing whereby we should be double checking or be thinking, are we going down or are we going up? Once you have your time frame, once you have the location that you are looking at, if you're looking at just 2 months, then you know what you are looking at. Say for example, if I want to look at couple of months from here, 1 2 3 4 5, if I'm looking at just 5 months, I'll say over that period of 5 months we have a consolidating dollar in play. You understand? So the time frame that you are looking at and how long a zone that you are looking at can determine whether your trend remains up or down. But the major trend that you're going to be having at the back of your mind is the major trend is slightly up. Meanwhile, how do we see that major trend that is slightly up? Is we saw it from this low that is lower compared to this low that is higher than it, and then we saw it from this high that is lower compared to this high that is higher from it. So we have a slight inclination of trend moving up, and it is glaring as well, so there's no need to be confused about it on a major monthly time frame. All right, but what we are now seeing, despite the fact that we have that, is when we now dissect this further, okay, we can see that inside our channel that is showing us a slight move of uptrend. If we put a trend line on this, okay, we can say that inside that uptrend line, the price has broken another trend line. Yeah, and you know that the moment when price breaks a trend line like this, price is gonna go and look for another zone to start from again, which is the base right over here, and that base that you're seeing over here is a little bit higher than this one, and is giving this old chart a reason to be thinking, okay, the trend is still up. A magic or a miracle or whatever any trader is thinking of can possibly happen, but you are not going to be trading thinking of a magic is going to happen. Okay, you are not going to be trading thinking of, if God can just answer me and let this turn around. You are not going to be trading based on emotion. That is not how to win in this market. Okay, if you have your emotion attached to any position that you take in the market, okay, whether you buy or you sell, and you're already thinking that yes, when this money comes in, I'm literally going to pay my house rent with this. When this money comes in, I'm literally going to take my girlfriend out to a date. When this money comes in, on one single trade, you've already put so much of your life liabilities on top of it, which means your emotion is what is going to make decision
Spend the money before
in
you
that
earn.
particular case. Okay,
I said we spend the
because
money
you are
before we
already
even earn it.
thinking of how and when
Yeah.
you go. Sorry.
I said we'll spend the money before we even earn it.
Exactly. That's what you are thinking of. Okay? So you are not approaching the market from a standpoint of view of someone who see clearly what is going on. You are approaching the market in what I will refer to as tunnel vision. You have one particular opinion at the back of your mind before you approach the market. All right, and that's what constitutes a failure. And this can happen to anybody, irrespective of who you are. And sometimes it takes a lot of time for someone to be able to overcome it, because your first intention, yeah, is this: when you get involved in this business, is you want to make money. But I want you to now come to think of it. If you remember, all our young children, yeah, we send them to school, don't we? And when we send them to school, mine children, they go to school. When we send them to school, we never let them have at the back of their mind that, yeah, this school that you are going from their early age, that this school that you are going is what is going to feed you tomorrow. We don't tell them that this school that you are going is what is going to make you money tomorrow. We don't tell them that. So once we do not give them a reason to have a certain emotion to be able to think that, okay, this is the reason why I'm going to school, so that I can make money by going to school, or so that we give them a whole different type of reason. We don't even let them understand that we are setting them up in life for good. All we have to tell them is school is good for you. Just go there and go and learn and play with your friend, isn't it? So they don't have any opinion to be thinking, okay, if I don't go to school today, it's going to affect my grade. If I don't go to school today, I won't be the champion that I need to be. No, we have overburdened ourselves with our own personal circumstances, which is normal. So now what we want to do is, how do we now have an objective in trading each and every day? Okay, how do we improve our timing so that we just don't go into the market and just go and trade at any point in time? So what I do to improve my own timing, yeah, and improve my results is simple. I don't have to trade all the time. Okay, even if I decide to now trade at any particular point in time, it has to be the right time. Okay, and the right time only occurs at certain areas on the charts. How do I know the areas where the right time is going to occur? All right, so this is what I do, and it has to be high probability as well, so that when I'm taking that trade, as much as I'm taking that trade, it has to at least give me an edge to be profitable. If I do otherwise, I will see it in my results. If I do not follow the rules, I will see it in my results. Okay. All right. So say for example, this is what I'm gonna do. I have all sorts of different kind of structures and strategies that I employ. For example, there's what we called. Let me bring you into this one, but this is not what I want to. This is not the strategy that I want to discuss, but I'll show you. There's a particular trade that I took yesterday based on that particular strategy. All right, and I'll show you the reason why it works. So I'm trying to load up my chart, and what trade was that on? Do I remember? Let me check. All right. So that was on Eurocard. Okay. And you'll be surprised. So if I say this is my Eurocard chart, yeah? And I want to trade this market without emotion, I'll go to 30-minute chart. All right. So going to 30-minute chart, everything, by the time I'm entering the market, everything has already happened. This drop has occurred, okay? So when this drop has occurred, I'm there thinking to myself, well, the only reason why I chose to trade Eurocard yesterday is because the currency strength meter is showing me that euro is literally weak yesterday, and then there was a Canadian data that came out, and then that literally makes the Canadian currency stronger. Okay, euro is completely weak, but a Canadian news came out, or we are anticipating some more reaction from the aftermath of the Canadian data that comes out yesterday. But I have this particular strategy. Can you see this? Yeah? Can you see where my mouse is? All right. So this is called market profile. All right. So what this chart does is simply instead of you having a candlestick chart, yeah, the candlestick chart only does up and down. Okay, candlestick charts will only give you up and down. All right, so candlestick chart only work with the x axis, yeah, only works with the vertical axis alone, which is the price alone. But the market profile works with not just the vertical axis, it works with this axis. I want to see whether you are following me. What is on this axis?
The date.
The date and the time.
No.
Time.
Where I'm touching. Huh? The date. The date and the time. All right. So I'm going to use. Say that again. All right. So I'm going to use one time. Yeah. The time that I'm going to use is the time. Okay. And this is the reason why this particular charting package is very significant and very powerful. This actually does not just work with the price alone, it works with the time. And how does it work with the time? It works with the amount of time that price spend in a particular location. Okay, so say for example, can you see how long these alphabets are here? From here to here, we have a very long alphabet.
Yep.
We have a very long alphabet. Can you see?
Yes. Okay.
All right. But over here, we have less alphabets. Yeah? Over here, we have singles alphabets. Yeah? Over here, we have double alphabets. And over here, we have couple of alphabets and couple of alphabets. What this tends to do is this. If price spends a long time in a particular zone, that's how much longer the alphabets are going to be. Okay? There's a reason why price spends a long time in a particular zone. Let's say, for example, now in this particular zone, we have this is 30-minute chart. Look at it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Right? And that 24 means that is a 12-hour period. Okay? Because each candle is 30 minutes. Alright? So each candle is 30 minutes, and 30 minutes to 30 minutes is 1 hour. Is 1 hour. So this is a 12-hour period. The market sits in one particular location for 12 hours. Do you know what is happening in that location?
The trend is about to change.
All right. Do you know the meaning of that consolidation?
Trend is about to change.
The trend is about to change. Well, not just the trend is about to change, it's painting a different picture. You see, when you see price move up strongly like this, yeah, the price we want to see whether this move is valid, okay? And if this move is valid, then the price will tend to be playing near the eye and be feeling the areas near this move, because this move was unexpected. But if this move is valid, then price is not going to be able to go down easily. Yeah. So the price want to accept that this move is valid. In trying to accept that this move is valid, because this move is a surprise move, a lot of people will be shocked with this move, especially if you're coming from a situation whereby all you are doing when you see all these dojis are you are selling, okay, and then you don't have no stop loss and this move occurred. So it's going to be very shocking to see such a move. And when you see such a move, some people who have made money from here, they are more than happy to just take home whatever they've made. Others who haven't actually make money will now start to be thinking, no, am I going to come out? No, it's going to go back down. No, it's not going to go back down. No, this is what's going to happen. So a lot of confusion will be setting why price is not going to move higher, but it will be accepting its fate that now I've reached an area whereby I've moved to, I want to settle down, or I'm just going to be relaxing. I'm not going to be doing much in this kind of situation, because a move that's supposed to take maybe 3-4 hours occurred just within a period of 30 minutes. So price is now going to be looking for an area of acceptance to say that, okay, I accept this move. If price do not accept this move, if the traders do not accept this move straightforward, you will see the sell-off. Eventually, this move occur. It takes time, 12 hours, for traders to accept. Yeah, and that 12 hours that it takes for traders to accept end up being what?
No, screen is
Being
gone
an
and you went off for
equilibrium
a
zone,
while.
or being a consolidation zone, or being a
Yes,
And you went off for a
went
while.
off for a while.
We don't know whether you've been talking, but we
my
didn't
screen
hear
is
you.
gone.
Oh, we didn't hear.
Wow.
Oh, sorry. All right. So
Yes.
Yes.
yeah, I've been talking. Sorry.
Eh?
Can you see my
When you
screen
were
now?
explaining the candles,
Alright.
the long one, you know,
So what was the last thing
towards
you
the
heard?
left-hand side. Yeah, that way. When you were talking there.
Explaining the candles.
Sorry.
The one, you know, towards the left-hand side. Yeah, that way.
All right.
When you were talking there.
All right, so I'm gonna go back to it. So literally, what I was saying is, in this particular zone, a lot of traders might be thinking of selling. Okay, and the reason why they might be thinking of selling is because they are candlestick player and they've seen that they've got quite a lot of doji, which shows that the market is possibly tired and the market is gonna turn. Yeah, the market can be very surprising and decide not to turn, which is the case that you see over here, which is a good huge move. Which, when you compare this move, how many pip move is this? This may be because of news. That's a 91 pip move, yeah. And the usual that we've been seeing in the candles that precede that move is just about 15 pip move.
Yes.
Okay, so when you see a 91 pip move compared to 15 pip move, that is a surprise in the market.
Oh.
Yep. And that particular surprise is going to take time for it to settle down. Okay. And that time that it takes for it to settle down is what you're going to be referring to as is a consolidation phase, right? It's not just a consolidation phase, it's price and the traders accepting with time that this price is okay for them. Okay, the new price level that we've attained, now they want to take it in and absorb it and take it as a zone of balance that, okay, no problems, this has occurred, this has occurred. We're not going to kill ourselves anyway. Do we accept this price? So while they are trying to accept this price, nothing is going to be really happening. There's going to be high volume, yeah, coming into the market. High volume of traders that literally do not want price to go this higher, yeah, and high volume of traders that now want to change their bias and want to say that, okay, let me quickly load in more orders for either the move to go up, or let me quickly start to load in more orders to bring this down. All right, so whoever is going to bring this down now, we don't know whether that's what they're going to do or whether they're going to take it up. The only way you can know if they're going to bring this down or take it up is, let's put an horizontal line here, yeah, and then go to a higher time frame. So when you go to a higher time frame, which is daily, all right, so when price shoots up to this area, what do we have right next to this area? You can see series of resistance, okay. So price literally shot itself up to an area of resistance, and then price is thinking at that particular area of resistance, oh wow, this is done. Hello.
Hello. Okay.
Wow. Oh, yeah, I can hear you. So as you coming in one by one, thank you, Chioma, thank you for joining in. I've got, let me share the screen. Okay. So I've got Chioma, I've got Joseph, I've got Nevan and Nets. We're waiting for Jackson, Edmond, and the rest of them. Hopefully they'll come in and join us. But in the meantime, because it's been recorded anyways, someone can possibly go back to it in this area of let's see, 2 hours 42 minutes. All right, so what we're looking at is this. We're looking at that huge candle based on the trade that I took. Everything is all about knowledge. Everything is all about being able to use knowledge to your advantage, okay? And it's not hard, but you just have to have the knowledge, and gaining the knowledge can be sometimes daunting, especially if you don't know the right person to give you the particular knowledge that's going to harm you with what is going to let you have success. All right, so we were dissecting this area, and I'm saying to you that this area is going to be an high volume area because the move has already occurred, yeah, and a lot of traders are now going to be adjusting their position, okay. But when I put a trend line, when I put an horizontal line here and we scroll back, let me put it on a 4-hour chart, and we scroll back, we literally realize that when price went up to this area, all these areas are areas of resistance, okay. Like over here now, price went there and then price come down. So all these areas, you can see some touches here, even you can see so many touches here. So when price goes back all the way from down to this particular area, if you know that your horizontal line is there, then you're going to be thinking of there's a possibility for rejection. If you do not know, you're going to be thinking, well, it has shown a move up, and that particular move up that it's shown, there will be continuation with the move, okay. But in this case, it's a total different scenario, and what I'll be looking for is simple. I'll be looking for all this area of high volume, yeah. what happened in area of high volume is sorry about that. What happened in the area of high volume is that is the area where traders tend to do two-sided trades. Yeah, this is the area where a lot of exchange is going to happen. This is the fairest price that traders believe it's okay to do business for the day. Okay, so quite a lot of traders will be exchanging their buying and selling in this area, so there won't be control. There won't be anybody in control more than quite a lot of traders will just be sitting down balancing their book and be saying, okay, we've encountered a little bit of profit, we've encountered a little bit of the other side of trading. They will be literally balancing their book. They want to shift in more orders, they want to absorb in more orders, they want to shift out more orders. So all those things will be happening over here. So some traders that want to buy more euro against the card will literally be coming in this area, knowing fully well, having the information about this area. They know that the market is not going to move in a very strong manner. So if they have £1 billion of orders to execute, this is the area where they're going to execute it, because they know that as far back as it's a consolidation zone, as you're going to refer back to it, or it's an equilibrium zone, yeah, it is just a zone whereby traders spend a lot of time exchanging, and there won't be so much gap, yeah, between the prices in this zone. The range of the price is just within about 18 pips, which is good. So there won't be so much loss when they are exchanging in this particular area, because it's not moving so much. So once the exchange finishes and the exchange is running out, the next thing that you will see is market is either going to continue moving up, yeah, by breaking the resistance and continue to move up, or market is going to lose steam of moving up and start coming down. So in this case, what we see is price is coming down. But how did I take that trade? Yeah, and it's one of the best trade that I took that makes me feel good yesterday. All right, is 1 second. Yeah, no problems. Let me quickly bring you up to speed with this one. Right, I don't want it to be too, let me see. There's an area called this single print zone. Yeah, the single print zone, can you see this? It's literally tiny, and that's my concern. I don't want it to be tiny, and it was big a while ago. Let me squeeze it as much as possible and bring it back up. Alright, I know what I'm gonna do. Euro card. Alright, let's put the strategy on it. Pattern, market profile. Okay. Alright, so arming myself with the knowledge of understanding what is the name of the chart that you are using. It's a MetaTrader 4 chart, right? Arming myself with the understanding of market profile, I can literally understand how the single print area works. So what is a single print? A single print is a low volume area. Yeah, what is a low volume area? Say for example, that's an area where there's no plenty of orders occurring. Yeah, and that move is going to be a huge move that will occur within a 30-minute period, and no any other move will go there and occur again. So I was looking at this area of F. Price has already dropped all the way down to here. Yeah, and as soon as I see that price has already dropped all the way down to here, I think, yeah, price has already dropped all the way down to here. Then I look around on the market profile, I see that I have a single print on this area. So I put a pending order at this area of single prints. Yeah, this area of single prints before price goes back there. As soon as price gets back there, even on the 1 minute chart, price just take my order and literally just bring me down quickly. You see this move, it occurs within 1 hour, and that is a 50 pip move. All right, and for you to be able to catch such a 50 pip move in such a short period of time, whereby you are looking at price and you're saying this thing is going up, this thing is going up, but just because you know what happens in a single print area, that's an high probability zone for you to be able to enter a trade. If you enter a trade in a single print zone, yeah, number one, what's going to give you is a low risk, because you know that the moment price comes back inside this single print and feel it and goes up, that means you are wrong. So what I'm targeting is, what is my risk? My risk is going to be from here to here, which is about 7 pips. Okay, so I use that 7 to 8 pips to capture this 50 pips.
I did that again. I lost you
This
somehow.
strategy, Paula, what is, I've never seen this before.
Sorry?
You know, this one with the alphabet on the left-hand side. Yeah.
Paula, what is, I've never seen this before.
Right.
You know, this one with the alphabet on the left-hand side.
Yeah. Right, so this is called a market profile chart. Okay, it's on it's a special charting package that literally that charts the price, yeah, with time. Okay, so it literally compares price with time. And how does it do that? Each and every this topic is for another day. Yeah, it's not for today, because this is not what I wanted to teach today. But for you to understand market profile and how market profile works, it's a little bit advanced, but it's very powerful. Okay, because on the market profile, I know precisely which areas I'm going to act straightforward without me even having to think, why am I acting there? Because I know that area works. All right, so that is one strategy on its own. So you can have all sorts of different kind of strategy that you know that works. Yeah, so say for example, I'm looking at a chart and I don't see anything happening anywhere. I will come on to my market profile and look at different charts and say to myself that, okay, I know that I can put a pending order around there. The trend is already down. Okay, what I'm looking for is continuation of this particular downtrend. So I want to put a pending order if the market retraces back up. All right, so if you put it at the right particular price, you're gonna have a low risk trade. Okay, and that low risk trade can now lead to a continuation for you. Okay, and that is what tends to happen in this kind of scenario on this market profile. Market profile, we're going to discuss it. It's a very good indicators, but that's not what I wanted to do today. Yeah. What I want to do today is, how do you improve your entry and exit timing? Okay, so that each and every time that you enter a trade, you are entering at a particular location that will be positive and perfect for you. Okay, how do you do that? So each and every day when you wake up and you want to look at a particular chart, everything requires a little bit of work. Yeah, everything requires just a little bit of work, and once you can just put that work into place, then you wouldn't have to worry that much. This will literally improve your trade entry and exit time. Yeah, and we're gonna do a little bit of back test. All right, so who gave me the euro yen? Do you have any currency that you want to have a look at?
Yeah, look at gold. You trade on gold?
Me the euro yen, but seems Edmond has gone. So if you have any particular sorry,
you trade on gold?
All right, gold. So let's do gold. Yeah, is everybody cool with gold? All right, so we're gonna do gold now. Yeah. Oh, so wow, the problem with gold is I have everything on gold. Well, it will make it much more faster anyway. So this is a monthly chart. what I would normally do is this, and this is good for everybody to understand. Yeah, you see, in trading has got to do with also of different kind of players in the market. So you've got players who are in the market for a longer term, yeah, who have bought what you haven't even bought, who have owned it before you start even looking into the market. So those are the traders that will be looking at a monthly chart. They are the investors, okay? So, and they are the big players. These are the central banks. These are the Federal Reserves. These are the big financial institution. Yeah, and you cannot compare some financial institutions, say for example like Blackstone, that are now turned to BlackRock. They manage assets of about 6 trillion, close to about 6 to 10 trillion dollars worth of assets. That's what those financial institutions manage. That is literally about over the half of China GDP on its own. So financial institutions like that manage big amount of funds. We are talking about FOMC, which is the Federal Open Market Committee of America. Those are the Federal Reserve. We're talking about the central banks. Those are the people that deals with the monthly charts. Okay, so they will be looking at the monthly charts on gold and be saying to themselves that, okay, we've reached a particular level now where we're gonna act. They are not in the market every day. They just look at the market in one particular location and they're gonna act in that particular location, and they don't care whatever happens. Okay, so they will be looking at the monthly charts. So what they will tend to do is on the monthly charts, that's where they're going to be acting. So all the moves that you are seeing around there, that is literally giving a serious push down, these are the areas where those big boy act. Okay, and it's on the monthly chart. All these areas, they are the one who knows the last highs, because that's where they're gonna come in and push the price down, whether you want to believe it or not. All right, but if you have the knowledge and know that on this particular day gold is going to reach a particular price level, they themselves don't know, but they know how to interact with the market. They know when the market has gone too high, they know when the market has gone too low, and they're going to put their orders in. If their orders supersede every other orders in the market, the price is going to respectively do what they want. If there's other orders in the market that supersede theirs, yeah, they literally gonna lose on that trade, and there's nothing that they can do about it. Okay, the only thing they can do about it is make sure that they are protected. So they would have protect their position and know that, okay, we are going into the market for a buy. Unfortunately, the price turned against us, and it doesn't even have to be just trading alone. Say for example, we're talking about gold. Apple, do you use Apple? Who use Apple phone? Every phone that we use, every smartphone that we use, there's a tiny element of gold in every smartphone that we use.
For receiving
Do
signal.
you know what they use the gold for?
Yes, for signal.
Do you know that in every smartphone there's gold inside every smartphone?
Yes, for signals.
All right, so they use that phone to receive the signal. That gold does the connectivity at a very high level. In fact, if you don't know, some people, they literally collect
And
old
extract
phones
gold.
as much as possible. All the
And extract
bankers
the
that you
gold.
don't use anymore, they will collect all those old phones and take it. Sorry?
I said, and extract the gold.
Exactly. They will break it down and then they will take out the gold out of all those smartphones and turn that gold back into proper gold and make money from it. But it's a long process. Anyway, you can make money quicker and faster from the forex market than having an industry that you're going to be running on petrol, hiring staff, and also of different kind of things that won't work according to your according to your guidelines. But once you build yourself with these skills, then you don't have a problem that much. All right, so they will act on the monthly charts. So what I tend to do is, when you look at this, let me make it bigger, because you mentioned gold. let me start from another chart. Yeah, let's say for example, so that it's not gonna be like as if I just want to do quick option to the answer.
I
I
have
don't
to
really like the
comment you.
quick
I really enjoy
way
your
to the
lesson,
answer.
please.
I like to show you the
I'm
way
just,
that it
it has
works
sparkled
so that
something
you
from my
can.
brain.
Comment you. I really
I'm getting
enjoy
it.
your
So I will
Oh,
be definitely,
thank you. Who is that?
I will be disturbing you, honestly. Thank you.
Oh,
No, thank
thank
you.
you.
Yeah, and I'll come to London. Thank you for
Thank
your
you.
time.
Disturbing you, honestly.
Mm.
Is that Nevan from Bradford?
Yeah, and I'll come to London. Thank you for your time.
Oh, no problems. No problems. I'll see you when you come to London. All right. Well, for every other person that's still on call, Chioma, Jackson, Nevan, Izzy, Yo, Mighty, Edmond, and Winnie Chi. Thank you for staying tuned. I know the people that stay tuned, the people that really know me, and the people that always benefit are the people that stay to the last bit. Because I don't know what usually happen at the last bit. The last bit is always the sweetest spot of the whole class. I don't know why it's always like that, but the people that always stay to the last bit, not because I want to encourage anybody to do that if they don't have the time, but at the last bit we always enjoy ourselves. Everything always come back together, and then we make best use of it. We even do live trading, you know. Right, so going back to, I want to go to gold now. Hopefully this chart, all right, so this is good. This one is good. All right, so I'll go to gold, and then whether you like it or not, if you want to be a proper trader, if you want to be able to make your own decision, yeah, you have to start from a monthly chart, and I'll show you how simple it can be. Okay, it's not that complicated at all, not. And then we're gonna back test it for us to be able to see how powerful it is. So we are looking at the monthly chart now, yeah. So what I want to show you is, first of all, you have to understand the meaning of trend, okay? And if you understand the meaning of trend, you have to understand the meaning of consolidation. So I believe you understand the meaning of trend, that you can look at this chart and say to yourself, and what we're going to be discussing now is powerful yet private, yeah. So how many people do I have here? 8 people, okay. And tonight,
Hallelujah.
all of you are going to receive something
Amen.
that is going to be a blessing to your trading scenario.
Amen.
That you'll be thinking of, wow, I wish I've known this before. All right, because I like when people are actually energetic and they want to learn. You know, I've been doing this for the last 12 years. I kind of learned from so many powerful traders in the market, you know, and then that's what gives me the opportunity to be able to share the same thing that I've learned over that period of time, all the mistakes that I've made, all the positivities that I've seen, every single thing that I've tested in the market, the ones I know that works, the one that doesn't work. I'll be able to tell you clearly that, listen, this is what works, this doesn't work, okay. And then we'll be able to now make use of harmonics and every other thing, you know. I don't want to confuse you. I can start laying down more than 60 things I look at when I'm looking at the charts, 100 different technical indicators, but well, at the end of the day, everything does not have to be that complicated. Yeah, it can be very simple. So what we are looking at, when we are looking at the charts, we are looking at a trend, yeah. And if we are looking at a trend, we are looking at how the trend is built up, okay. So you can see that gold is moving up from here, right? And moving up and coming down, and moving up and coming down. So if we concentrate on the way gold moves, we want to see the structure of gold, okay. And what do I mean by structure? We want to see the building block of gold, okay. But what we're going to be looking at when we are looking at the building block of gold is we're going to be looking at what I refer to as structural points and significant points. Okay, so what is structural points? Structural points is more or less like the foundation. Okay, without that foundation you can never have a house. Okay, so if you look at here, we have this trend up, the way the price is moving up and moving up and moving up. Even over here we have a base right here.
Yeah.
Can you see how we come down to this level?
Yeah.
Are you with me?
Yeah.
All right, you can see how we come down to this level. You see the low of this level here, yeah? That is the last low that we've seen on this level. And this last low is what leads to the building block of how this chart continues to move up. Okay? All right, you see that low right there. Somebody knows about that low. One big financial institutions know about that low. One big financial institution place a particular trade at that low and price never comes back to visit it. It's because the orders that goes into the market at that particular low is so huge, yeah, and then every other time that price thinks of coming back down to it, there's enough orders to just push every other price away. So no price can match up to the amount of orders that comes in here that send this up. Okay, just bear that in mind. So what I'm gonna do is I'm gonna put a line, an horizontal line, just exactly at that low. And the funniest part of everything, this is how sweet it can be. That horizontal line, I'm gonna make it a cyan color, okay, and I'm gonna make it a dotted line. All right, why do I choose this area? Can anybody tell me the reason why I choose this area? Sorry?
Because it's you say it's a structure.
So if you are following me, that answer shouldn't be difficult because I've just explained to you the reason why I choose
the foundation,
that area.
isn't it? So it's holding
Sorry?
it.
It's a point
what is a
where
structural
players
point?
can.
Exactly. That's the foundation and it's holding it, yeah? Exactly. And then it's got a value to it as well. And that value is what you are interested in. And what is the value? Can anybody see this?
681.
Can you see my mouse?
Where's your mouse? I can't even see your mouse.
681.75.
Where's your mouse? I can't even see your mouse.
This is my mouse moving up and down.
Oh, this thing is blocked
Where
me.
the blue line
Okay.
is on the price line. Where the price
All right,
is.
yeah.
Can you see?
Oh, this thing is blocked me. Okay. All right, yeah.
Right. So this is $681.75. Okay.
At that price.
At that particular price, $681.75, somebody placed a trade. Yeah.
At that price.
At that particular price, which is the low of this, somebody placed a trade. And that particular trade that was placed, somebody make that huge profit all the way up here. Yeah? All right. And you see that particular price, that is the price that you need. Because each and every time when the market gets to that price, something will always happen. You can decide to take my word for it. You can be thinking, wow, is this possible? Let's move forward. All right. The other thing that I want to show you is, I said to you that that's a structural point. When price goes up again, can you see this low? You can see this last low. That's another structural point as well. Okay.
Yes.
Right. So when price move up, can you see this point here?
Yeah.
Right. So a point where price tend to turn or things reverse, yeah, that area is called a significant point. Okay. It's more or less like the same thing. The only difference is it's not just a building block like structural points. So this area, this high here, is a significant point. It's because at this particular price, what is that price? 1,226, 1226, 30. Yeah. So you know your price. It's not a thing whereby you want to be guessing. Forget about guesswork now. Yeah. Forget about indicators. Remember, if you go into the market and you go on your trading platform and you click buy, yeah. When you click buy, are you clicking it at a particular
You don't
price?
see the prices unless your lot sizes.
So you literally clicking your buy or sell at a particular price.
Unless your lot sizes, but you don't.
Sorry?
Yeah. Okay. Yeah. Okay.
Say that again.
You're clicking on the price.
Yeah.
Unless your lot sizes, but you don't.
Yeah.
Yeah. Okay. Yeah.
Yeah.
Okay.
Yeah.
Exactly. Okay. Yeah. Exactly. Because you have to buy at a price, you have to sell at a price, isn't it? That's how you make money. So if you know your price and you know how your price work, this that I'm teaching you now is what is called price behavior. Okay, there's a way price behaves, and you need to understand what price behavior is and the way price behave. The moment you understand price behavior, yeah, then all this price action that you are taught will be making sense. But if you do not understand price behavior, then it might be a little bit difficult for you to even make good use of price action or every other indicators. But if you have price behavior locked on into your thinking faculty and you can understand how price behavior works, which is what I'm going to share with you tonight. I've shared with some of my students before. Some of them make use of it, some of them they forget to make use of it, but it's something that we will always go back to. Okay, the reason why we always go back to it is this is the only zone in the market that gives it a high probability and low risk trade. We want a low risk trade, a trade that you can literally say that my risk is very low, and at the same time it's a high probability, and I'll show you how that works. All right, so we've got a significant point right there. Okay, all right, so I'm not going to be going to the left so much anymore. Yeah, this is going to end in the next 10 minutes. When it ends, you know how to join back in. All right, so if we look up and we keep going up, yeah, there are some other significant points there as well. So look at this area. Can you see this low?
Yeah.
All right, so we're gonna stick an horizontal line directly on that low. Okay,
Structural points.
so that is another structural point right there, because this is the low that we build our foundation on to push price up. Okay, all right, so this is a structural point right there for us. All right, so if we keep going up, yeah, and you look at this chart, can you see this low and that low as well? All right, this low is lower than this low, so this is the structural point for the move to go all the way high. So the particular low that send us to the last high is very important as well, because that is the foundation that builds the highermost point on this particular gold market. Okay, and then where the price turn again. So this is not a situation whereby we are not talking about a price zone. No, don't worry about price zone and this and that. Let's talk about specificity. Let's be specific when we are trading, yeah? Because when you are specific, when you are trading, everything will be coming together. You wouldn't have a doubt. Okay?
Amen.
You wouldn't have a doubt. That doubt is this, the spirit of doubt is what I want to cast away tonight. I want to bring the spirit of clarity into your trading, so that you don't, when you see it, you don't have to doubt, and you can decide to do it the same time all the time, 7-8 times, do the same thing 7-8 times all the time when you see that kind of an opportunity, and I'll show you how to be able to do it. But the problem is following it sometimes can be very difficult, because we've already built in some bad habits already. But by continuing to train ourselves towards it, and by continuing to do some back tests, you will be able to say that, wow, so why didn't I follow what I already know? So it's a paradigm that eventually will shift, and when it shifts, then our trading will literally get better. All right, so going forward, so we have that particular structure right there. All right, so again, at the top over here, we're gonna have what is called a significant point at the highermost price. Okay, so already, if I say to you, what is the highest price that we've seen in gold, already you know that it's 1920.94, and that price is very significant because somebody sold at that price. And you can, to be honest with you, when I'm explaining this to you, you will be able to see the manifestation of what I'm saying. So if someone sold at this price, yeah, if this guy, or is a big guy, or is a big investment house, or it's a big central bank, or it's a big institution, or it's a collective of the big or the biggest financial institution, and they sold at this particular price, yeah, look at how the price went down. Okay, so there is an opportunity to move back up, yeah, on this green candle to go and retest this area. But what did they form? They literally form a barrier whereby price cannot even attempt to go there anymore. Nobody is offering any price closer to this area anymore. So even if you want to buy, there's no price for you anymore, because what has happened has happened. All right, so what tends to happen is this: some of these numbers or these areas, you don't know them before time. You wouldn't know them before time. But the moment it prints, the moment they act, now you have an indication of where they are hiding. Okay? So having an indication of where they are hiding or where they act is what you will now use to empower yourself. Okay? These are what we call sharks. They are the big. This is the reason why some of this opportunity in trading has been eaten away from people for years and years, and they have been benefiting from it because they literally know how the market works. The market does not just work on any indicators like that, the way that we see it alone. Indicators are just mathematical calculation, number one, and as much as they are mathematical calculation, they are lagging behind the price. So price is the ultimate. Okay, indicators cannot work if price is not there. Are you with me? Indicator works based on price. So price have to make a reaction before indicator can now work. So if price does not make a reaction, indicators is just going to lie there, be looking. Indicators cannot tell you that, the next thing that's going to happen is buy. It's acting based on every single information that it's collected from price. Okay? That's the reason why sometimes indicators can go funny. That's the reason why sometimes indicators will give you one particular signal, and if the price decides to go all the way haywire, there's nothing indicators can do about that more than follow it. Are you there with me? All right, so going forward, you now know your significant points over there. Another one that is important is what we refer to as market failure. Okay, what is a market failure? You see, we are in a uptrending market, right? So when we come down to this level, we try to retrace back up so that we can continue that uptrend. Okay, but we have a particular candle that shows us the last price that tried to go up but failed to reach a new high. Okay, and that is the first indication that the trend is changing. Okay, and that is called the market failure. That is where the market fails to make a new high, and it's that candle right there. And that candle has got a value, yeah, which means someone that knows something at 1,802 on gold price decided to sell in this area again, despite the fact that the significant point has shown, decided to sell in this area again, and from the moment that it sold in this area, he or she or the bank or the financial institution sell in this area, that is the area where the market fails to make a new high. Yeah, and from that particular zone, price start to come all the way back down again. So as much as you have your significant point, your market failure point or your market failure area is important as well, because that is the beginning of trend change. Are you with me? So when you have a high, yeah, now you want to see a new high, okay, but you didn't get to see that new high. What you get to see is a failure high, the high that failed to make a new high, and then you want to know that value again, because at that particular place again they are hiding there. All right, that is where they make a decision. So each and every point on the chart where they make a decision is quite important for you to know that, okay, that's where they are making decision, that's where they are. All right, so when you now arm yourself with all these tools, for example, okay, you can have as many as possible data points on your charts. The next thing that you now do is you now want to look at what is happening currently, okay? So on the gold market, what can you see? What is the market condition? Oh, sorry, what is the major trend?
It's a downward trend.
What is the major trend on the gold market? It's a downward trend. Okay. All right. So it's a downward trend. Okay. If you say it's a downward trend, depends on where you are looking at it from. All right. You may be looking at the gold and say to me that it's a downward trend, and if I put a trend line on this, that's what's going to show me whether we are in a downward trend or not. All right, so this is going to end now. I'm hungry right now. Yeah. Really? You would have killed me for that. If I'm the one who didn't see it.
I hear you guys.
Have you checked your phone? Have you checked your phone?
I can hear you.
I know you can hear us. Right. Going forward, let's do this. Right. Thank you for joining back in.
Yes.
Let me quickly see. Can you see my screen though? Yeah. If you can see my screen, let me look for the chart again. Sorry? All right, great. Right, here we go. So now we have our gold. We've got a couple of points marked up, yeah? But normally what I would do is, instead of me stressing to mark up so many places, if I want to do it so fast, yeah, I'll look at where the price is currently, yeah? And when I look at where the price is currently, I'm going to look to my left and see if there's any structural points near where the price is currently, yeah? if I see any structural points near where the price is currently, that is what I'm going to concern myself about. Because most probably I want to check a couple of more charts as quick as possible as well. Okay, but once I do it for a week now, or once I do it over the weekend, I wouldn't have to do much more than be changing one or two things every single day. Okay, and that's the beauty about it. And I will show you what you need to be changing every single day as well, so that you can be adjusting to the market condition as it unfolds. Okay, so this is not this style of trading is something that we bring you in sync with everything that's happening as it's happening, and I'm gonna show you. So the only structural point that I can see here is this, yeah, because and it's closer to the price. Okay, all right, so I'm gonna just definitely mark that one up and know that okay, that one is closer to the price. The next one is I can look around and see if there's any other structural or significant point as well. All right, so over here the significant points that I can see is when price push up, we have a brief sell-off of 1, 2, 3, 4 months. Yeah, how high to me that is huge as well. Okay, but it's not closer to the price, so I might not bother myself so much with it. I might look again to the right. When price move up to this area, we have a huge sell-off starting from this candle. 1, 2, 3, 4, 5, 6, 7, and that sell-off just span all through down. Yeah, so that's another important area. If it's not closer to the price, I might not put any line on top of it. Okay, because I don't want my charts to be too messy. I want to deal with what is real. All right, so enough of the structural and significant point for now. Now you know how to do it and how to look for it. Now what is important now again is I want to look at what has happened in the last quarter. Yeah, someone was asking me a question that how do you do your analysis? That do you do your analysis on
It's me.
just the daily, or do you do your analysis on the
Yeah.
weekly? I don't know if that
Nevan
person is in the
Christie.
room
Yeah,
right
it's me.
now.
It was me.
It's me.
Right, is that Nevan?
Yeah.
All
Nevan
right.
Christie. Yeah.
All
It was
right,
me. It was me.
great. So everything that I'm giving you now will answer all your question. Yeah, so your weekly analysis, your daily analysis, your monthly analysis, your quarterly analysis, your yearly analysis, it's embedded in this strategy. Okay, so and once you have this strategy, you can, it's something that I give to you. You can make use of it. I want you to be able to even teach it. I want to be able to call you out and be like, yeah, you handle the class today. I want you to be able to say like tomorrow, you have done one chart, Edmond has done another chart, everybody have done a different chart, and every one of us are on the same page because this works. So before you know it, how many of us is in the room? We are 7 now in the room. So if I say that, okay, the 7 of us, we can literally be looking at maybe, let's say, if each and every one of us do about five charts, that's about 35 different instruments that we all have that we can trade from, because we're going to do the back testing of this and you're going to see how powerful this is tonight. So everybody can go now and say that, okay, I would do 5 charts. These are the charts that I'm going to do. Every one of us will be confident because we all learn from the same source, number one, and whatever we do is not going to change, number two. And as much as it's not going to change, whatever we do works, and you will see how it works. So when you post your charts, just by following the instruction the way that I'm doing it, when you post your charts, everyone will be able to see where the next high probability trade is. All right, so next week the way that we're going to trade is we're going to trade all those high probability zone, and you're now going to see what kind of results you get from that zone. You're going to see whether your result is going to improve if you take your trades in that zone, or whatever is going to happen to your results if you trade in that zone. And then the next thing that is going to do for you is you're not just going to be jumping in and be looking for trades. Even when you have an harmonious corner opportunity or harmonic scanner trade, you'll be able to tell which one is likely gonna work so perfect. All right, so going forward, don't let me bore you with too much of details. I want to check the last 4 months. Okay, so this is 1, 2, 3, 4. Yeah, so the last 4 months has already done for me a quarter worth of analysis. Okay, a quarter of the year worth of analysis. So what I want to do with that last 4 months is this: if it is closer to price, then it's even much more better. Normally what I would have done is on each and every of the months on the eye, I'm going to place an horizontal line there. But when I'm placing this horizontal line, I have to check my magnet tool. Can you see this tool? Right, so when you check this magnet tool and it is blue, if you take the horizontal line and put it on top of that particular candle, it's going to be the exact eye of the candle. But if you do not check this tool, and you place a horizontal line on it, it won't stick to the right eye or low of the candle. Okay, right, so the magnets tend to attract the line to the particular price point that you want it to be on. All right, so what I wanted to do now is just because it's the last 4 months, what I'm going to do is I'm going to change my line to solid. Okay, so that I can know that this line is a little bit different from the structural point and significant point line. All right, but what I would do again is I want to make things faster. I'm going to go and check the highs and lows of the month that is closer to price. So this one is one of them. So and then the other one that is one of them that is closer to price, so that we can do things very fast, is I can take this one. Is the low of that's closer to price. The other lucky one that's closer to price is this. Okay, and I'll show you how to now trade this and capitalize on this, so you know that the price is right next around all this area now. Okay, all right, so that's where the price is, and those are monthly points for you. All right, and that is where they are hiding, because somebody knows about all these highs and lows. Somebody knows that if they buy from this low, and they sell at this high, those are the people who make the most money on that particular day. It happens. You can literally buy from the low and sell at the high. And that highs and lows form what is called a support and resistance. That is the high of the day where price choose not to go up higher anymore. And that is the low of the day where price choose not to go lower anymore. So this is a twist to your support and resistance. All right, so going forward, so we've done the monthly, but normally what would have tend to happen is I would have put one on this side, one on this low, one on this high, one on this low, one on this high, one on this low, one on this high, and one on this low. Okay, right, but for the sake of this illustration, so that we can move fast, I'll just choose the one that are closer to the price. All right, so now I'll go to the weekly charts. Okay, so now on my weekly chart, I want to see what is going on weekly too. So on weekly, I can have significant points and structural points as well. Okay, but what I'll tend to do is for my own significant points and structural points on weekly, I can look at charts and look at where it is closer to the price. All right, so what I will tend to do now is I'll pick my horizontal line tool again and check the last price, last 4 weeks. Okay, so this week is there, and then I'm going to change the color to what I'll call magenta.
Okay.
That will literally let me know that that area right there is a weekly point. Okay, and then I'm looking at this weekly chart. Let's look at the monthly charts quickly again. So I look at the monthly chart. When I look at the monthly chart, I can see a spinning top, which is a reversal candle. Okay, and this this spinning top is a reversal candle to me. All right, so what I'm gonna do is I'm gonna go on weekly now, and look at what I'm having on weekly. So easily on weekly, I can see that we have a huge sell-off, yeah, and then now we are having a candle that's looking positive, yeah, and this positive candle can literally be telling us a different story going into the new week. All right, because things can start to do what can start to continue to go back up based on this weekly rejection or reversal candle. All right, so already you've built a mental picture of what can happen next week. All right, so now at this particular area, this is your low point, yeah, and that is what is closer to price currently, and you want to count the last four. So 1, 2, 3, 4. So you have one over here as well. All right, so once you put that horizontal line on another one, okay, what you want to do is you want to demarcate it. So this particular horizontal line is for this small candle, okay. So what you're gonna do on that one now is you can put a space in between them for you to be able to see that you have not just the weekly points, but you have the monthly points there too, because they are now overlapping one another. Right? So it shows on monthly, now it's showing on weekly as well. So I'll check a second one, which I'm gonna put another horizontal line there as well. Okay, so in this zone I know that I have got 3 different significant points. Are you with me? So I've got one weekly low, I've got another weekly low, and then I've got a monthly high and low area. Yeah, so when I count it, 1, 2, 3, 4, the next price that is closer to my close of this candle will be over here, and this is on weekly. Yeah, you can see that this is a weekly chart. Okay, so I'm not gonna bore us with so much other details because I want to move forward very fast. What I can do again is see whether there's any structural points that can cause any problem going forward. All right, and you can see how this line even match up with this one. Yeah, and that this one right here is a significant zone right there. So what I want to do is I can decide to put another line on this particular structural on this particular significant point right there, yeah, which matches up with what we have here. So this is more reinforcing. Okay, so what I want to do now again is, after I've done the weekly like that, yeah, it should have been on the high of this and the low of this, high of this, low of this, high of this, low of this, high of this, low of this, yeah, and it will be on the high of this as well, and one is already at the low of this. Okay, and that's how you're gonna deal with the weekly one. Now you have a weekly perspective of what all the not the longer term like the monthly traders, but all the position traders are looking at. Yeah, so you can see that their next move is likely gonna be to buy up. Okay, so where are they buying to? We go back to daily now. So now when you are in daily, what you want to see is you want to check the last 4
Now you can't
days.
counting the
So
dailies. You started
1,
from the green,
2,
1, 2, 3, 4. But the
Okay.
monthly, when we're
So
counting it,
what
we
is-
missed the first one and then we counted a raising.
But the monthly, when we're counting it, we missed the first one and then we counted.
Right.
All right.
Okay.
The reason why we miss the first one on
Yeah.
the monthly is because that's the current
Because
month.
today,
That
yeah.
month is not yet
Okay.
finished.
All right.
Right.
All right. So for the daily and the weekly, for the weekly,
Yeah.
Okay. All right.
we're supposed to put one on top
Yeah.
of this weekly zone 2. Sorry,
Yeah.
because this week has already finished.
Yeah.
Yeah.
It's
So
okay,
we're gonna have
yeah.
one over there as well,
Yeah.
so that when the new week opens, it's got a couple of things to deal with. Yeah. So for the weekly, needs to have one as well. So the daily now is this. So on the daily, what you
Very
can
low.
see is
Both
we
sides.
have 3 last days that
Yeah.
shows very low spark.
Both sides.
Yeah.
Consolidation.
And all these 3 candles are just more or less like an area of consolidation. Okay. And they are not just area of consolidation. You see, when we have a huge significant move, if you can remember what I was showing you on that market profile, yeah. So we have a huge significant move.
Oh,
Market needs to
this
find
English.
the equilibrium.
Yeah.
After this huge significant move, yeah,
Yeah.
the gold market needs to find an equilibrium, need to find not just an equilibrium, need to accept that all this move, there's nothing they can do about it anymore. We just have to accept this move, and then we have to see whether we're going to see continuation of this move by waiting for more news, or waiting for more data, or waiting for more instructions. Yeah. If we cannot see continuation of the move, the buyers will take advantage of these low prices. What tends to happen is, you see, when price is moving down, okay, the price won't stop to move down until it finds buyers. Yeah, that's the reason why price is shifting continuously to look for new buyers that's going to attend to that cheap price or low prices and find value in that low prices. So when price decides to drop over here, buyers did not come in, because most probably mere looking at this spinning top, and then looking at this evening star, buyers are looking at it and be like, this is a fundamental shift in the price of gold. Okay, so this is an indication of bearishness coming. But you have the first day, after this shift, yeah, when we have the spinning top, and then we have this bearish engulfing candle, yeah, that is a fundamental shift. All this that's happening over here now is it's a disbelief that wow, how come the gold price can just turn upside down from that area? So this disbelief is leading buyers to come in and be like, maybe we can respond to cheap prices. Okay, but the serious sellers are looking at this and be like, well, if you choose to come in and you want to respond to cheap prices, we are going to show you that we don't think you have enough strength as much as us. You cannot absorb the amount of supply of gold that we literally want to supply at this particular point in time. So the buyers that are coming in, they don't have enough strength to push the price up. Eventually they're gonna have to let go. Yeah. And when they let go, the price will start to sell off again. So the first sell off, the second sell off, the third sell off, all these sell off are looking for buyers.
And then those people up
till
there
it
will
gets
come
to
and
this
buy.
particular place. Even by the time it gets here, the buyers are tired. They are thinking,
And then those people up there will come and buy.
exactly.
For
Because now a lot of buyers will be in a situation whereby they are confused.
Frustration.
Exactly. Because they can't wait to actually follow through with what the market is showing them. So if we do the daily one, so where the price is currently, we put a horizontal line there. Right. So for daily now, what we're gonna do is we're gonna change the color to blue. That's my color for daily. And then we're gonna change
weekly and
this
daily.
to that style so that we can know that there's a weekly
Weekly and daily.
exactly confluence together in one particular zone. So the next thing that you want to do is you want to look at the last four. This is 1, 2, 3, 4. So as you can see, all the last four, none of them is really closer to the price when this price shoots up. So what you might have to do is just choose one that is closer to the price. Maybe that one. Yeah? So that one is closer to the price. You know that if price is coming down to this place now, yeah, then the next thing you want to do is you want to mark up the next one. Okay, so this is the only one that's closer to the price over the last 1, 2, 3, 4. All right. So when the market opens on Monday now, yeah, we know that we have this I zone markup, that I zone markup. It will be difficult. It will be difficult for price to literally just come down to here, yeah, and come down to the next one and come down to all this low without you noticing it touching this one first of all. You understand where I'm coming from? Because this is the one that is closer to the price. So if the price of gold starts to come down, the first price level that is going to touch is this price
I
point
think my
here.
screen is gone. I don't know if it's my house that
Because
the
that's the one
network
that
is
is closer to the price.
fluctuating.
Sorry?
My screen, I can hear your voice, but I can't
Your
see
screen is
anything.
gone.
I'm just.
It may be from you. I can still see.
Yeah.
You can still see. Okay, let's talk. I can
All
still
right.
hear.
So what I'm gonna suggest you do is
Mm.
you can close it.
Hey, wahala go dey o.
No, you can close it and relog in back. I'll wait for you. Use the same link to relog in back.
Okay.
While you're doing that, I'm just gonna quickly use the loo and get some cup of tea or something.
I'm in Nigeria.
I'll encourage
Are you in
everybody to take
Nigeria?
a
You guys
5-minute
in
break as
Nigeria?
well.
Ekpale.
I am.
And they are not sleeping, no. They are all going to have an election tomorrow. God
Some people
help
are
us.
in Nigeria.
Amen. No.
God
Amen.
help us. I'm from Kaduna State. They want to Islamitize us, all of us in Kaduna. God help us.
God will help us, my sister. I'm in Lagos.
Oh, you are in Lagos. Are you Angie?
I'm Chioma.
Chioma. I have people in Lagos, so Chioma, I think we'll connect. So that people, I will send them so that they will see this, the true of this thing. People think I'm crazy.
People, I will send them so that they will see this, the true of this thing. People think I'm crazy.